Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. Good morning, guys. Welcome back. Good afternoon, good evening, wherever you are in the world. Thanks for being here with us, taking a look at some markets as we count down to retail sales, I believe. Yep, we got retail sales numbers and unemployment claims coming out in about 10 minutes or so. So we're going to be reacting to this, going over the numbers, seeing what it does to markets. And speaking of markets, you've got the NASDAQ up about 1% here this morning. S&P is up 0.5%. The Dow Jones is up 0.18. Actually, the Dow has been performing really well recently compared to the others. S&P is doing well, but the Dow Jones really doing quite well. Dollar index flat on the day. The Russell is just modestly lower. You've got the Nikkei, the Japanese stock market, was down more than it is. Now it's come back a little bit, down 0.5%. VIX is down 1% here this morning. We'll see what happens with the VIX. Chinese stocks down again here today. Can't seem to catch a break, those Chinese stocks. They had a really big run up, and it's been a sinking ship for a little bit here. Down 20% from those highs that we put in right around the October 7th mark. So big, return to the downside here so far. We'll see if that can find a low. I'd be really curious to see if Chinese stocks, put in some sort of higher low, if they start, rallying once more, what that could look like. But again, you've had a really big rise, a really big fall, and it takes it back to, what Chinese stocks have struggled with for a number of years, which is, a lot of foreign investors don't particularly trust the Chinese government, the Chinese situation. There's uncertainty there about how real numbers are, or whether or not the government is truly on the business's side, or are they going to pull the plug? You never know. And so it seemed like that the Chinese central bank wants to continue to stimulate the economy there, get things rolling again, but it's been a really tough battle to fight that downtrend. That being said, the Chinese stock market in previous years has had really strong rallies, but it's just been a really tough last few years. Back from 2021's highs, we've not come anywhere near close to retesting those. Meanwhile, U.S. stocks and, even the Japanese stock market, and we could take a look at like the DAX, right? We could look at DAX here. All of these stock markets, for the most part, pushing through all-time highs. And so it's been an interesting one to watch. The Chinese market has been one that has been struggling for a suspended period of time. Taking a look at gold here. Gold is, it actually, the way it closed yesterday was really interesting. Gold tapped the all-time high yesterday, came back down, and closed right around the previous all-time closing high. Technically, I think that's a all-time closing high yesterday, but it's not a particularly pretty one. That being said, today we've pushed past it. We're retesting the highs yet again, and actually put in a technical all-time intraday high for the price of gold. So gold continues to roar higher this year. It's been a monster year for gold, and there's so many different reasons we could speculate as to why that is. I wouldn't be surprised if, I'd be surprised if this was not the case. Gold this year has been thriving off of a lot of the uncertainty of the world. You've got conflicts in the Middle East going on. You've got conflict in Eastern Europe going on. You've got uncertainties about global economy, the Chinese situation, right, that we just spoke about. You've got the elections this year in the United States. You had elections in the UK. There's been a lot of things that have happened this year that, investors may feel could have derailed, or could possibly in the future here derail things and make things more uncertain again. So it seems that could be playing a part in why gold has been up so much this year. That being said, the other thing that would justify gold going up so much is just realizing how much money has been printed into the world. And not only that, but central banks are looking to ease borrowing costs further. So when central banks are cutting interest rates, it typically reduces the value of the existing currency supply because more currency gets created. And that is why gold probably also is having a blockbuster year. Guys, gold is one of those things. It listens to, kind of what's happening in the global financial system. So when we take a look at gold year to date, guys, we are looking at a return for gold of 30%. 30% on a boring yellow metal. That is remarkable returns for gold. Gold does not usually go up that much in a year. In fact, that's like a triple, quadruple yearly average or whatever. Gold has great periods in the market, and then it has periods where it goes sideways and does nothing. I mean, believe it or not, following 2020, it was actually a sideways move for gold for, well, let's just say you bought over around this area. You're looking at 1,200 days. So a couple of years of sideways price action for gold. And then we've got this secular kind of bull market happening for metals. Same thing with silver. Silver has participated in the rally as well and is near its highs. These are not all-time highs, but these are, last multiple years highs. I think it's like a 12-year high or something like that. Silver had a ginormous run up in like 2012. You can see 2011, 2012 went up to $49 an ounce, and believe it or not, even further back, it went up in 2008. I'm sorry, in 1980, went up to that range or near that range as well. So kind of crazy just to see silver still well off of its all-time highs. That being said, again, I mentioned stocks are higher here this morning. Taking a look at NASDAQ's price action on the 4-hour chart. So you've got NAS holding support here for now. I did get stopped out of my NAS position, but I do have a small position in the semiconductors ETF. Well, actually, it's not a small position. I have a pretty good sized position in the semiconductors world, which, means that even though I'm not in the NAS trade, I got trailed out of that one. The semis trade is doing quite well here this morning. So we'll see how that one can play out. Speaking of, indices here for a second, we got the S&P 500 testing back towards its all-time highs. And, I think that there's a lot of uncertainty. I mentioned it with the, a lot of uncertainty with the election, right? But when you look at the stock market, if you want to know what would make the stock market rally the most, right? Is it going to be Trump? Is it going to be Harris? Well, here's the take that I have on it. What's going to make the market probably rally the most would be if the executive branch and the legislative branch have split power. If one is red, one is blue, one is blue, one is red, the market will like that. Why? Because the market doesn't love a bunch of change and passing of a million laws to change all the landscape. They don't really want that in either direction. As a collective, Wall Street kind of just wants things to just keep going and keep doing their thing. We don't want a bunch of regulation. We don't want a bunch of taxes, tariffs, all that stuff. The more, and I'm not saying that about Trump or Harris, like both of them are going to initiate as much change as they want to do. Wall Street actually wants minimum change, regardless of which one you like. It's about Wall Street just wants things to chug along and make money, and big changes create uncertainty for the picture. It doesn't matter which candidate you're talking about. So what does Wall Street want to see? Wall Street wants to see a split Congress and presidency. So that would actually be, in my view, one of the most bullish cases for the stock market. So we'll see if we get that. But if we don't, the market will do its thing. It will be very volatile in the coming weeks with the presidency stuff. But I kind of go back to what I said in my live stream yesterday. I don't think that the presidency is as important as people really think it is for financial markets. It is important, don't get me wrong, but at the end of the day, the Fed, the economy, those things, they're their own living, breathing, animals. At the end of the day, those things matter far more. Is the, secular AI trend going to perpetuate into 2025 and 2026 and carry new, efficiencies into businesses? Those are things that are making markets go up. That's the question, right? Not whether or not it's Trump or Harris. Anyways, let's see what else we can get into. So the dollar index is it's been going up here quite a bit recently. I wouldn't be surprised if you get some sort of pullback. We got retail sales coming out in just a few minutes, so we'll take a look at that. We got unemployment claims, see what that's going to do. In fact, let's switch over just so we're primed and ready for this. Again, what we've got here, it's not that boring of a metal, Nick, talking about gold. In terms of like financial symbols, instruments, things that move, gold usually moves very little. I know people think it moves a lot because when you're trading it on leverage on a CFD broker, it seems like it moves a ton. But in actual percentages, usually gold doesn't move that much compared to things like the NASDAQ or, small cap stocks or tech stocks or silver even moves more than gold. Like gold is almost like a step up from currencies. I mean, it does move a lot more in currencies on a percentage basis, but it moves a lot less than a lot of other things. But it depends who you ask. I don't think gold is boring. I just am pointing out that in terms of a movement wise, it doesn't move that much. It does this year. This year is a bad example for me to say that. Up 30% is a massive move, but that is a very atypical year for gold. Got about a minute and a half here, guys, before we take a look at the retail sales numbers out of the United States, as well as the unemployment claims. Which one am I looking at closer? Honestly, I would say I care about equally to both of these. Unemployment claims is important to see where the labor market is at, but retail sales are still very important as well. We'll see. Sometimes you're going to get a big spike out of these events. Sometimes you're going to get nothing. It just depends what the data tells us. What we'll do here in 1 minute as we get the numbers is I'll do my best to guide you through my thought process on how this actually impacts the fundamental story for the dollar, for gold, for stocks, etc. And I'll do my best just to kind of break that down as easily as I can. We got about 45 seconds here before those numbers come out. Just so you know what you're looking at here on the screen, you've got the stock market stuff here. So this is the Russell, the NASDAQ, the S&P, and the Dow Jones. You've got gold right here, the dollar right here, silver's right here, and oil is right here. So all of your different charts, if you want to just keep an eye on it to see what the reaction is across all of them, might be easiest. And we can go ahead and roll our breaking news. All right, so we got about 10, 15 seconds here before the number comes out. We'll see what it does. Again, don't leave after the spike. We'll discuss if there is a spike. We'll discuss what it means for markets and why. Here we go. All right, retail sales, unemployment claims coming out. Okay. Nothing too big of a reaction just yet. All right, we got core retail sales higher than expected. Unemployment claims came in exactly as expected, 241K. So no big surprises on that front. Retail sales being strong is arguably a good thing for the stock market, not as good for gold because, of course, that shows consumer strength and a stronger economy, generally not particularly bullish for gold. Dollar index is up here. Let's double check to see any more numbers for those retail sales numbers coming out to. There it is, 0.4. So we had a strong retail sales numbers report. Unemployment claims came in line with expectations. I would say that this is a good report. Kind of supports the recent bump in stocks here. And gold down a little bit off that makes good sense. Dollar index continuing to push along here. Strength for the USD. You got Dow Jones up, Russell's up a little bit off that. NAS and S&P also seeing just modest moves higher off of that. Silver, gold down here off of the number. And let's break that down for a second. Why would this be positive for stocks? Well, think about it. Retail sales reports the consumer activity. Are people out there spending money or are they not spending money? And what we got from this report is that people were out there spending money, and spending money shows that there's an appetite for it. And when there's appetite for that, what can businesses do? Well, businesses can make more money. If businesses are having more customer demand, more people stepping up to buy things. They're coming back and buying things again a little bit more aggressively. Prices are high, don't get me wrong, but they're not rising nearly as fast as they were a year or two ago, right? Inflation is not, prices. There's a difference. I discussed this yesterday. Prices are still going up, but instead of rapidly going up, now prices are going up still slowly. And people get all up in arms. This always drives me crazy. People are like, yeah, but when are they going to come down? When are prices going to come down? The only time prices go down in US history almost always is because there's a massive recession and a bunch of people lose their jobs. That's when prices go down. So I don't want that. What we really want is we just want wages to go up and prices to go up at a very okay pace, right? It's okay if prices go up. We just don't want them to skyrocket higher because that, can lead to really bad recessions. So inflation is still a thing, but it's nowhere near as hot as it was a couple years back. Does that make sense? Hopefully we're on the same page with that. S&P 500 taking out the highs of the day. Let's switch over to our just main market view here so we can take a look at, here's SPY, what we've got, the S&P 500 tapping through these highs here. We'll see if that can maintain those gains. We've got, what else we got? NASDAQ up 1.01% here this morning. If we take a look at some sectors here for a second, we've got, let's see, what do we got? In terms of sectors, utilities are up a lot here this morning. I'm sorry, that was yesterday. Stock market hasn't opened up yet, but got a good push there going on utilities, which has been a theme all year long. Nasdaq's up 1%. Dow Jones is up 0.2%. Let's call it. Russell's up just a little bit here as well. And again, those retail sales numbers are positive to the state of the consumer. Right? It's been a rough couple of years. And I don't mean that in a political sense. I know it's a very political time, but it doesn't matter who, in my opinion, and this is just my opinion, it doesn't really matter who was given this situation, because a pandemic is something that we've never had to, deal with at this scale. And we were fortunate enough to have a pretty strong economy, and low interest rates, by the way, for the last like 20 years, which helped us, to sort of extend through this period. Now the question is, though, are people starting to feel, warned by inflation, or are people is it going to be a survive thing? And, again, I'm not trying to get into the politics at all. I'm just trying to point out, in terms of the economy, how does this impact us as traders? Well, retail sales numbers being strong is a good thing for the dollar. Dollar strength, seems to be willing to continue off of this report. You've got just a win streak going for dollar bullishness, really, really strong. Just continuing to push up here. As we tap into this potential resistance around 104, will be interesting to see if we can, take out those levels. Are we going to be able to just continue the party, or will we see from there perhaps a bit of a corrective pullback before, what I think is likely to continue higher? Now, let me say this. I think that the dollar index, if there's one thing that I'm kind of interested in terms of the election, I think that the dollar index likely will stay strong under either president. And the reason I say that is because both of them are probably going to spend a lot of money if they get put in power. Why do I know that? Well, they both have done that in their presidencies. I know Kamala Harris is not the standing president, but the VP. So she's part of the decision making, right? So both potential candidates are likely to spend a lot of money. And why does that impact the dollar? Well, if they spend a lot of money, it's likely that the Fed's going to have to keep those interest rates higher for a longer period of time in order to avoid us running into a massive inflation event again. So higher for longer potentially could be very bullish for the dollar. I think that there's a case to be made that part of the reason the dollar index is up is the upcoming elections, as well as the strong economic data that we've gotten in recent months. So we'll see. Gold gave back a little bit of its gains here on this report, down here on the hourly chart. We'll see where that goes. Gold is above these highs, this resistance area. However, we'll see how well it can hold those those gains. One of these things, when you get a big break through all-time highs, guys, it's a question of, does it break decisively with like strength, or and then pull back and continue, or if you get one of these things where it breaks and then it just sort of chops, you don't always want to see that. Like, you want to see some defense of this new territory. You want to see bulls really stepping in and just buying into the highs. Otherwise, it makes me a little bit nervous that you may get a bit of a reversal, a bit of a fizzle out, a stall out. So we'll see what happens on that front. In terms of setups currently on the Edge Finder, let's take a look, make sure we got the latest data here. We got Bitcoin setups here this morning. I am still watching Bitcoin. I am currently long semiconductors. I'm not long the NASDAQ, but I am long semiconductors, which pretty much, make up a huge chunk of the NASDAQ. S&P 500 is another one I'm looking out for. Let's actually I'm going to do this filter here. I personally don't usually trade minor currency pairs, so I'm just going to remove them from the list of items. I'm also going to just make sure that the signals that are showing up are bullish ones or bearish ones, so that we can only look at things that are possible setups. So let's look at dollar CAD, euro dollar for currency traders out there. Let's take a quick look at these and see how they're forming. Euro is probably going to give me some FOMO here today, guys. I can tell you that right now. The euro has been trending lower, and I just can't get a pullback, it seems like. Yet again, I'm going to have to move this fib down. And there's really, this one's so out of I'm not going to say that it's extended, because I think that it can keep going lower. However, it's extended itself way further than I was looking for. I was hoping that I would get this pullback, and then I was going to sell into it, but missed it completely. I put out a post in our Discord about that, but we'll see where that goes. But hold on one second. I'm going to show you that if I can. So this is what I put out yesterday. Boom, 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 right here. I said I missed it because that euro trade was like one that I was looking for in the group, just did not quite pull back for me. I could not get that entry, and then it left the station. So, there are some currency trades that I like out there, but they're just not forming. Like, I just can't get the pullbacks. It seems like dollar CAD, same thing. I was looking for, break, retest, continuation, didn't quite get it. So dollar CAD is on the watch list, but quite a ways away from a point I could actually enter a trade. Let's take a look at the Dow Jones here for a second. Same thing here. We're getting a pretty consistent theme. There's a lot of signals that I'm liking right now. I'm in some of them already, and that's been great, but there are other ones that I'd like to get into, but just can't get pullbacks. So I'm looking for like this 38.2% retracement on the Dow Jones. I like that setup, but again, I've been waiting for that, so there's nothing there. SPX is another one on the setup. Same concept here, looking for pullbacks if I can get them. But I'm not really too worried about this because I'm personally long a lot of ETFs right now, so I've been trading those in the VIP room as well. I'm long SMH, which we'll see how that plays out. But we've got a bunch of stuff that's possible setups, but just not quite giving us pullbacks right now. But we'll see. So anyways, USD CAD, Euro USD, SPX, NAS, Bitcoin. Let's look at Bitcoin really quick, guys. I want to just see this Bitcoin chart. So I sold puts on Bitcoin through the ETF BITO. So I do have a bullish position. If you don't know what selling puts is, basically it's selling someone else a bearish bet in the options market. That's what I did. And that trade has gone really well. I think it's up like 80 something percent of max profit, which 85% of max profit. So I think I'm up like $500 on that trade. But anyways, I'm looking for a pullback. So if this actually pulls back, this might be the most prime setup for me right now, would be looking for that retest, maybe on the 4-hour chart. If we can draw in some fibs here from this recent push around that 59,000 level. If we get a pullback, I do like this quite a bit for a possible setup. In fact, I really like the 50% retracement on this, which is a big ask because, Bitcoin may just, I've been on fire here recently at missing great trades. Like, setups come on and then I'm just missing them barely and they move off without me. But if we do get the pullback, I'll look closer at perhaps the 38.2 and 50% retracement for possible setup. If I take that trade, it will be shared inside of our Discord room. Every trade that I take is shared as a signal in our group. And I know people get all up in arms. Oh my gosh, Nick, you sell a signal service. I do, but I am as transparent as I can about this. I share everything I'm taking, why I'm taking it, and I'm trading everything live accounts. So it's no, just showing you, a demo account or anything like that. I can show you that I'm on a live account right now. I am plugged into my Webull account, which is a US regulated brokerage. I am in a bunch of trades. Every trade that I take gets shared inside of the group. So if that's something that you're interested, if you'd like to get the trades sent to you, I trade indices, commodities, FX, ETFs, stocks, and options. All of that can be found if you would like to sign up for that. We'll drop a link here in the chat. You can send a direct message to our support team here, and they'll get you set up with a membership. Or if you just want to go ahead and get started, we'll just drop the link. Just go to a1trading.com/VIP. If you'd like some more information, take a look at this. This might be easiest for you. Just drop the link here to this in the chat. So check this out. This is what the group looks like. We are as transparent as possible. We show real results, real track records, no nonsense. You get a full breakdown on this page. You can see who's trading in it. Myself, Frank, we have Ivan. Chris Pulver is also, he's got an offer in there as well. So if that's something that you're interested in, come join us, a1trading.com/VIP. You can use the promo code that's in the description, YTVIP, or you can speak with a member of our support team, and they'll give you a nice extra streamers discount, and they'll set you up with your membership right away. So yeah, it's a great time to join us. We got the elections right around the corner. Things are heating up big time, so should be fun. I'm going to be live streaming the election, which I think will be, it'll be a hectic night, but it will certainly be moving the market. So I'm going to be probably streaming that. So set your alarms if you'd like to join me for that. I will probably be live November 5th. I'm going to go ahead and say probably around 8:30 p.m. Eastern time, or 8 p.m. Eastern time. Is gold going back to all-time highs today again, or no? I would lean towards no, but I could be wrong. I would lean towards no because we just had a pretty solid economic number drop. Retail sales came in good. That's why it dropped so quickly. And if we take a look at yields here this morning, which are very important to gold, you can see a spike in the 10-year yield, which when the yield spikes, what that's telling you is that the bond market thinks that the economy is in a decent place and that inflation could be a little elevated by stronger economic activity. Remember, lots of buying and selling of things can actually create prices to go up. If there's a huge demand for products and services and people are employed, all of these things can contribute to, inflation as well, which is kind of the report that we saw, this retail sales number coming in better than expected. Retail sales came in 0.4% month over month compared to 0.3% expected. Core retail sales came in real strong, 0.5% compared to a forecasted 0.1% growth month over month. And the previous one, they revised it higher from 0.1 to 0.2. So clearly some strength in the retail spending world. By the way, core retail sales removes auto sales. Retail sales X autos. So automobiles obviously are a very volatile thing. Sometimes they're selling aggressively. It also probably depends the season, right? When people are more out and about, people probably buy cars more. When it's real cold outside, things might slow a lot. So it's actually beautiful weather. I don't know where you guys are, but where I am, it's been really nice weather the last few months. Starting to get cold in Georgia. What about the Russell? Yeah, let's look at the Russell really quick. Russell is flat on the day. I do like the Russell, but I'm looking for pullbacks on this. Same thing with most of the indices. If I'm looking at this one, I am looking for some kind of pullback. Maybe this 38.2% retracement. I think that the Russell has a lot of potential next year, but it is a very fragile index because it needs cool inflation and lower interest rates, and it needs the economy to be really solid. We do have pretty good evidence that the economy is not, dying right now. It's actually, accelerating. If we take a look at the economic growth, GDP growth has been pretty solid, pretty solid. I mean, take a look at, as an example, here's US GDP growth. Let's look at like UK GDP growth. Do you see the difference? There's not nearly as impressive, consistent growth. Well, what about Japan? Well, not nearly as impressive, right? Periods of contraction in their economy. What about Europe? Europe, still quite slow compared to the US. Canada, so just wanted to draw that out. You know, the US GDP growth is, of the places in the world, I mean, the US has had a really impressive last, really last few decades, but especially in the last few years with all this inflation and rate hikes and all that stuff globally, the US has held it together surprisingly well. Many economists thought that 2023 was going to be a major market recession. And then when that didn't happen, analysts were very much expecting 2024 to be a massive, recession correction change in market sentiment. Anyways, guys, we're going to now shift gears here to the next part of our live stream. We're going to be having Miko and Marco joining us here on the call to take a look at some technical setups for the coming days following these big moves that we saw from retail sales. Stay tuned. We'll be right back with Miko and Marco just after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, guys, we're back with Miko and Marco. Hey guys, how's it going, man?
What's up? What's up?
So we had something that we got to go right to, because this is always something what we're talking about is Bitcoin, which I don't know. It kind of seems like we might have seen some evidence for perhaps a change in this momentum. So I wanted to start here because we've been discussing, us three have gone back and forth on Bitcoin for every week for months now, and just basically said, hey, we're stuck in this range. And it seems like we might be pretty close to a bigger scale breakout. So I wanted to actually start here today. Miko, do you have any thoughts on Bitcoin? Are you watching this at all?
Yeah, I'm keeping an eye on Bitcoin. I mean, I don't trade Bitcoin, but it definitely is very interesting. I've drawn my channel a little bit differently to yours, so my line's a little bit higher up. But yeah, it does look like we are possibly starting to see evidence of a breakout. Again, the key thing I want to see is big candles. And we did see that on the way up, but we're starting to slow down now. And especially with candlestick 2 days ago, wicks either side. Yesterday's candle, a bit of a wick to the upside. Today's a bit bearish, but that's still yet to close. So I want to see a bit more strength in this breakout and really just command that we are breaking out. Otherwise, I'm not quite convinced yet. And if we do see that, then I'll be talking about break and retest, maybe a break and retest here or break and retest on this high here. And it could be some really nice buys because we could be seeing something like this happen with Bitcoin on the way up. So there could be some really nice break and retest opportunities, which could be very exciting to trade, but I'm not quite sold on the breakout just yet. I want to see a bit more candlestick, a bit more information. Maybe it means potentially entering a little bit later, but I'm not quite sold yet.
Yeah, and this morning we had retail sales numbers, which kind of show the state of the consumer, and I do think I bring that up because the state of the consumer is like really important to Bitcoin. We know like if the average college kid or young adult, young professional has a little extra money in their pocket, they're the ones that are more likely to dabble in some Bitcoin than people who are usually on the older side of the population. Not to say there aren't some older people who love Bitcoin too, but it seems like the average investor, the average trader in crypto is a bit younger. So, the state of the consumer is real important. So we'll keep an eye on that. But recently we've had some good strength in Bitcoin. I'm curious, Mark, are you watching this at all too?
Yeah, it's pretty interesting what is happening to Bitcoin. It is breaking that trend line. But again, my eyes are going to be on the major high. They're going to be on 73,740. Until we break that level, I'm not going to be really convinced. Maybe if we get like a big leg of momentum on the daily chart with a nice close, and then the next candle also continues going up, that would be pretty interesting. But my eyes are definitely more on this level than they are on the actual trend line that was broken and that we're closing above. So there is some hope, but I would be a bit more patient and wait for that major high to break. And it's not that far away. I mean, if we measure it, it doesn't have to go up a lot. I mean, 10%, that is a lot, but in terms of Bitcoin, it's not that much.
Right.
So if we wait just a little bit more, I think that would be a better sign.
Yeah, and I think one thing to add is between the three of us, this is one reason why I think for me, horizontal key levels are more important than diagonal ones like trend lines and things like that, because, and this is just personal preference, but if we think about it, all three of us just drew different trend lines. We drew different kind of channels, whereas we all know with certainty where the all-time high for Bitcoin is. Like, we can all mark that level in our chart and watch it. So I just wanted to point that out, because people who listen, trend lines, the issue, the difficulty thing with trend lines is that if you ask three traders to draw three trend lines, each one of them creates their own trend line. So not to say that they're useless, because they're still just generally showing, we've been in this stuck downward channel. All three of us were able to spot that. But then the question of, is it breaking out? Is this a false start? Really, as Marco, you just pointed out, if you get that clean break through the highs, there is no question, right? The bulls clearly have pushed it through there. So anyways, just another week keeping up with Bitcoin here. But I wanted to ask you guys actually about the currency market a lot too, because this has been an interesting one. We've had a real strong reversal, it seems like, for the dollar, at least for now. But I'm curious your thoughts. Miko, are you looking for any bearish side on the dollar, or are you looking to switch into bull camp?
Yeah, I've been looking to buy Euro USD and take Euro USD higher. I actually got some longs here, but didn't work out too well. But yeah, we've had a lot of momentum, and it's broken through the areas which I wanted to buy from. So in terms of my personal trading, I'm gonna sit on the sidelines for now and look to actively buy. My last area was here, which price has broken through. In terms of the dollar, we are seeing a really big push, and I'm looking at some areas around 104, 250, and possibly back at the high over here as well for some turning points. But in the meantime, dollar is definitely very, very strong, and we've just been grinding higher. So I wouldn't anticipate dollar reversing, because I think that's pretty big call to kind of anticipate that stopping on a dime and turning around. But as we start to approach some of these areas, I think we can go through at least some retracement, because this has been such a strong move. So I would naturally expect market to go for a bit of a breather at some point, and up at that high there as well. Of course, very pivotal area around 106. So in my book, it looks like dollar's still got a bit more room to the upside. So you might see euro fall a little bit further. Pound USD looks like it's trying to break through some support here as well. So if that does, I'll be expecting more downside there as well. New Zealand dollar already broken through some key support there as well. So it looks like in my book, USD strength might have a bit more room to move into.
Okay, fair enough. Same question to you, Marco. Dollar index or just any currency, like maybe euro dollar. Are you looking for dollar strength to continue, or is it looking stretch? What are your thoughts?
Well, for the euro and the US dollar, I was looking for a brief buy setup for maybe a bit of a correction of the overall downtrend. Right here, I saw just a little bit of momentum pushing up. So I was looking for the next candle to potentially print bullish. And then I would be looking for buy setups. After the retail sales came out, my whole idea is now basically gone. I'm going to reevaluate the situation. It's a pretty big bearish candle. It's probably going to close bearish as well. So I just see a lot more downside on the euro and the US dollar. The fundamentals are behind it as well. I had the same thing going on with the pound. I saw a little bit of a relief right here. and I was looking for a buy setup. It's looking also a pretty descending channel, which in my book is a bullish pattern. But again, with this retail sales number, it's looking a bit better on the pound, I have to say. If it can close like this, maybe leave a huge wick to the downside and continue pushing up, I would be a buyer in this market. So the euro and the US dollar definitely looks more bearish than the pound. So I'm going to be looking for sell setups on EU. AU is kind of in a bit of a no man's land, but GU possibly still looking for buy setups, still looking for that correction to the upside. And we will see what will happen. Again, all of the dollar pairs are fundamentally pretty bearish, right?
Yeah. No, that's for now, that seems to be, the case, but it's one of those things. Miko was pointing out that with the dollar index, even though fundamentally, I think that it does have some good grounds that it's standing on. You had some good labor data, you had retail sales today, you've had, unemployment claims staying pretty solid, JOLTS job openings holding up. There's been a lot of things that have been positive for the dollar. That being said, though, there is a balance between technicals and fundamentals, even in my own analysis. Even though I personally prefer, studying the macro a lot, I do also recognize that, as Miko's pointing out, you've had this really good run on the dollar index. It could take a break here at these resistance levels, that 104 level, which actually, if we look back on the chart, that was a pretty huge level for sellers when they took it over. Like I remember this time very well. 104, I kept saying that on my channel over and over. We're going to break 104. We finally broke it, and it just went flushing lower here to the downside. So I can imagine that there may be some PTSD for bulls here, where once we get up into this range, it's possible you could start to see a little bit of profit taking / perhaps sellers coming in. So even though fundamentally I think that the dollar may have some room to continue, there very well may be some, corrective pullbacks here within that trend. And who knows, it's one of those things. We've got the elections around the corner. There's big uncertainties there. New trends could develop, new things could change. But I do think that a small part of why the dollar index may be rising is partially the elections, simply because both candidates have a track record of spending a lot of money. A lot of money spending from the government typically means the Fed has to keep rates higher. Keeping rates higher means to stop inflation, which is, again, dollar bullish. So I think that might be a small part of this. Perhaps we'll see a corrective move after the election, after some of that uncertainty is out of the way. But I guess we'll just have to see. But really interesting stuff here happen on that side. What about the indices? I'm curious, Mika, are you S&P, NASDAQ? They've pushed on. There's been a lot of markets. Sometimes we get into these calls and it's like everything is extended. Everything is far one way. Feels like that right now, whether it be, Bitcoin indices, gold is at an all-time high. We have this conversation, and I know sometimes there's people who have heard this before, but I want to ask your thoughts on the indices, but also how do you deal with markets that are extended? What do you do when you're looking for setups as a trader when everything is, already making big moves?
Yeah, I mean, that's exactly what we're doing with the indices. S&P looks like it's just breaking the highs at the moment. US 30 looks like that's doing the exact same. NAS hasn't done that quite yet, so I really like NAS because I expect it to do what US 30 and the S&P are doing. So there's a bit more upside, a bit more room for us to move into until we come back into major resistance. But yeah, they are very, very bullish. And again, in these kind of conditions, we're not really seeing big pullbacks. If you drop to the 4 hour, the hourly, you get some nice pullbacks there. But in terms of higher than that, they're very, very minimal. So I think in terms of extended markets, the best way to look at them is they're bullish until they're not, or bearish until they're not. And if they remain in these conditions, who knows, they could really, really fly, and you can catch some really big winners in these conditions. And you can keep the risk small as well. So in terms of risk reward, they're very favorable opportunities. So with markets like US 30, when they're pushing like this and S&P pushing like this, I don't trade them, but if I was trading them and if I was trading intraday, I'll be looking at the 4 hour and the hourly to try and look to buy those pullbacks at areas of support and resistance, and I'll try and just see how far I can take them, because in these conditions, you just don't know where that top is, and you could really catch some big winners. I really like NAS as well because, like I said, it's still got room to that high, so that to me looks like a nice target to have, and maybe we go beyond that as well. But yeah, they're just very, very bullish. I know they're extended, so it might feel a bit awkward to buy them, but the chances are they're probably going to keep pushing higher rather than suddenly just drop on themselves. So I would always expect more upside until proven otherwise.
Fair enough. Yeah, no, I think that's smart. And we've talked about this, at least 50 times this year. But with gold too, when you have these markets that are just trending, it can be very easy to start convincing yourself this can't keep going on. It's gotta reverse, and it will. But if you hold your breath, you'll run out of air. It's these things are just going and going, and nobody's able to stop them. They will stop at some point, but we peasants don't know when that's going to stop, right? We could just ride trends. That's all we can do, and look for calculated reversals. If you're going to do a reversal setup on something like gold or the indices, totally fine. But just wait till you have proper confirmations, price action is agreeing with you, etc. That would be my opinion on it too. Marco, what about yourself? Indices / how do you deal with extended markets?
Sure, but before that, I wanted to come back to the elections. So the last election was 4 years ago. I think it was November 2020. And did you find a specific trading edge after the election? Did you execute some interesting trades? How is your plan for that?
Yeah, so during the elections of 2020, that was a very interesting time. The market was just pumped up on just stimulus and so much, like social media was going crazy during that time. If you guys probably remember, like it was just the pinnacle of social media, controversies, debates, and fighting. And, because whether you like Donald Trump or not, it's pretty obvious that he brings some serious controversy to the room. And, so there was that going on. And I think that during that time, there was just massive amounts of spending going on into the election, which I don't fault Trump or Harris for spending a lot of money into an election. I'm going to be honest. If I was trying to run for president, I would spend as much as I possibly could to make people as happy as possible. That's what humans would do to get votes. So there was a lot of that. So the markets were just pumping into the election. And then they just continued after. I mean, it's, people love to debate, stock market did really well under Trump. Well, it also did really well under Biden. It went well under both presidencies. Both had really good, standing stock market performance during their time. It's actually probably pretty close in terms of gains between the two of them during their terms. I think that money printing, what Wall Street likes to see is a ton of money getting printed and spent into innovation and building stuff, and they like low taxes. So if you had to ask me who's going to create a bigger bump in the stock market in the short term, probably Trump. But is it going to last and be the longer term, better for the stock market? I would say both of them are going to probably have good stock markets, as long as something catastrophic doesn't change. I don't actually think that the president really makes the difference in terms of whether the stock market itself goes up or down. I think that it's about the Fed, it's about the economy, it's about, trends in corporate America. I've talked about that a lot, like the AI theme, like, does that persist? Those are bigger questions to whether or not the stock market keeps going up than whether it's Trump or Harris, in my opinion. So it is worth discussing, but it's not worth, fixating your whole life on. And you have people who are just, I've had my comment section been really interesting. You guys would find it hilarious. You might have gotten these ones too, but I've had, just because I talk fundamentals so much and I've been having to discuss the election a little bit, you get people on both sides who are like, if Trump is elected, if Harris is elected, we're going to enter this horrible end of the world event. And I just don't think that in terms of markets, it is as important as people, make it out to be. It is important, don't get me wrong, but so is the Fed, so is the economy, so is all that other stuff. So it was an interesting time. Markets were just pumping in 2021. They've continued to do very well, but we'll see. I mean, it's one of those things that also just has to do with so many other variables all at one time. So last thing I'll ask you guys is any extra charts. I know we've done a lot of theory talking here today. Actually, Marco, I was going to ask you about indices. So if you want to do indices,
sure.
Come to Marco or Miko, maybe we can look at like some yen pairs or something different.
Sure. So shall I run through the indices quickly?
Yeah, go for it.
Okay. So on the 1 hour, the S&P seems to be pushing up with quite some strength. But the daily chart is what I'm mostly focusing on, and this is just like a big bullish train. I see no stopping of this momentum, especially after these two patterns, which are V reversal. So first V reversal, second V reversal, very bullish patterns, and I'm just not seeing any selling pressure happening here. So my bias is for this to definitely continue going up. The Nasdaq doesn't look as strong, but it is definitely going to follow the S&P, and it is still pushing up. On the 1 hour, it's looking a bit weaker, but on that daily chart, it's definitely showing some bullish momentum. So I really like how the S&P looks. I think this is just flying to the upside. I don't see any signs of stopping, and I think the other indices will follow suit as they usually do.
Okay.
Now for some yen pairs, is that okay?
Yeah, go for it. Let's see some yen.
Mhm. So for the yen pairs, my eyes are on EJ, which is pretty flat, unfortunately, on this 1 hour chart. So I'm just being more patient. It's really range bound. I have AJ on my list. It's looking pretty range bound as well. Just stuck in this sideways range. And the last one is NJ, and it is the same story. Very corrective on this 1 hour chart. It's probably going to be corrective on the daily as well. Kind of stuck in this flat channel. So my focus is on the dollar pairs currently. The JPY pairs, I'm waiting for a breakout on the 1 hour chart of some key levels, such as these lows on EJ and especially these highs. So until that happens, I'll most likely just be a lot more patient, and I'm going to expect more range-bound price action. But again, when the JPY pairs are sleeping, I'm on the dollar pairs. When the dollar pairs are sleeping, I'm on the JPY pairs. So that is why it's really smart to diversify.
That's a great point. I mean, if you can get these periods of time where things just move really nowhere for a couple of weeks, and if you're actively trying to trade, if that's a portion of or all of your income even, that can be really frustrating to sit there and watch for setups and nothing's happening. So it is nice to have a broader list of things. Miko, so same question. Your yen crosses, whichever ones you want to look at, euro yen, pound yen, dollar yen. Are you in any trades or looking at any trades on these?
Yeah, at the moment, I'm still holding on to my pound yen position, which I entered about 2.5 weeks ago now. It's been a long hold. It's been a long hold, but price has just been very, very sideways. So unfortunately, it's been a tough one. But my stop loss is above the high, and I've just said I'll let the market do what it needs to do. If it's going to take me out, it will take me out. If it wants to reverse, it will reverse. But I've been very bearish on the yen pairs. I'm looking for really big drops on them. I'm looking at them from a daily, weekly standpoint, and I think we can see a continuation of that big drop in July. So the way I'm looking at them is that we're going through somewhat of a correction, a pause, and then we might see the continuation of that. And I'm kind of pretty much bearish on all of them because we had that big drop in all of them, and all of them keep doing that similar price action. So if we can respect these highs, I do think they'll see continuations. They've just been moving sideways, as Marco mentioned, so it's been nothing really to report on for the past week. We do have some yen news tomorrow, so I wonder if that could maybe speed things up. But with all of them, they kind of give me similar price action. As long as they can respect these highs, I do expect to see continuation back to the low. And then, I'm holding onto that pound yen position to see if we can do that. But it's been a bit of a tough one to hold, but I'm going to let price do its thing, and hopefully I can find some re-entries along the way.
Did you pay any swaps on this?
Yeah, a lot of swaps on this one. So I wasn't expecting to be in the trade for this long, but again, the way I see swaps is that I'll pay negative swaps, I'll pay positive swaps, and across the year, the positive swaps won't weigh up the negative, but they'll eat into it a little bit, so it's not that bad. But they're definitely paying some negative swaps.
Yeah, that's a good point. I mean, a swap is a real thing, and I get that question all the time. How do you trade certain things and reduce your swap costs? And there's so many things to it. You can trade futures, you can trade ETFs, you can trade Forex. Each one of them has their pros and cons. Of course, the downside to Forex is that swaps can be costly, but it's like you're saying, if you have the right setup on the yen. The thing about the yen is that it has a tendency to just, when it drops very quickly, very far. It's been a tough couple of years on the short side, but I don't hate, shorts on yen pairs whatsoever nowadays, because just from a high level fundamentals perspective, I think that the game has changed from this period of time going forward. I don't think we're in the same game plan, which was, the Fed is hiking rates and inflation is out of control and the Fed is just fighting this inflation battle. That story, at least for now, is not the same story. Now it's like a different theme. So the unending hikes of rates, which is what drove the dollar just up and up and up against the yen, that story is gone, which I think takes away the theory that the yen is just going to do this forever. I do think that there's going to be more of a balanced view going forward. And if you take a look at the dollar yen specifically on a weekly chart, it's had a really good few years, but there's also really tough years as well. If you enter into some sort of global tougher period of time.
Oh, this is GJ.
I'm sorry, GJ. Yeah, it was same. Yeah, you're right. Let me look up dollar yen, but we'll probably see similar moves here. But yeah, GJ even more so, more aggressive. But you get these periods of times where there's corrections in the global economy, and then the yen looks very attractive, and then it changes. But that's the one thing about currencies, the pro and the con of currency trading, is that the long-term direction of currencies is not set. Whereas when you talk about gold and stocks and things like that, the long-term expected return is up. With currencies, long-term expected is there is no expectation. Currencies could go sideways forever, which can be wonderful if you are a range-bound trader, and if you're a trend trader, you can just spot those trends to the downside or upside. The biggest negative to my own point here about stocks is that if you're someone like me who generally is on the bullish side and you enter bear periods, that comes with ugly drawdowns, and it's just inevitable. So I trade both currencies, indices, etc. Currencies play a really cool role where you are not so subject to bull market or bear market returns. So that is a huge pro and con of currencies that I just wanted to point out. But can I ask you guys really quick, just to give a brief overview? I know you both are preferential to currencies. Nico, why currencies over everything else? I mean, everybody has their market. There's no one superior one. It's just everyone has their preference. Tell us why, a little bit, just real quick, why you prefer personally currencies.
Well, with currencies, with me, it's the ease of trading them. Again, when I first started, I was introduced to Forex, and I've kind of just stayed with it since then. So I've got so much experience there. But with currencies, it's the ability to play both sides, which I quite like.
Yeah.
And going forward, I'll be looking to trade some indices more, because I want to kind of expand what I'm looking at, because with indices, it's kind of one dimension. And I know if with swing trade, I'll just be looking just to play it to the upside majority of the time. But with trading, with FX, if the market is flying, I'm looking to short. If the market's falling, I'm looking to buy, because it can give me that kind of hedge almost to some position. So I quite like currencies because of that. And there's just so much to choose from as well. So there's always the opportunity on the cards. But yeah, because I've been trading for so long, I'm so comfortable with it, it's hard to kind of trade anything else, really.
Yeah, no, I love that. And I think that, you've basically outlined the pros and cons really well. It's like, if you're trading currencies, the beauty of it, I remember in 2022 when the markets were just like tanking, which it is, by the way, it is no fun to be predominantly long index trader, sectors trader, stock trader. It is not nearly as fun when the markets are down, because you're just, losing money and waiting for the next, rally, and you're just hoping for it. It's a very frustrating experience. So when markets are going straight up, the indices are easy. They look great. It's so, oh my gosh, it's just easy money. But during that time, currency trading actually was a really nice piece of my activity that was less correlated to just markets dropping. So that can be really nice. Marco, same question to you. So currencies are your primary thing that you're focused on. Why currencies over commodities or indices or other things?
Yeah, the biggest reason was in Europe, Forex is much more popular than stocks. So if you want to learn to trade online, it's most likely going to be Forex. So that is why I started with currencies. And I kind of like the same things that Miko mentioned. So you can buy, you can sell. It's not like the indices where they are mostly going up. But in the future, I'll definitely be looking to add the S&P and gold into my, let's say, trading analysis and executing trades. I did test the strategy that I use for Forex. I did test it on the S&P and gold. It didn't work as well, so some adjustments will be needed. Especially the big adjustment will be to mostly look for buy setups. But I think it's very smart to combine multiple assets, multiple instruments, and not just say, I'm a Forex trader and I'm going to forever trade Forex. I think that's a very narrow-minded view, and it's not going to bring you the most returns. I used to watch it, I view it like that, but I think that was a wrong approach. And in the future, I'll definitely be looking to expand.
Well, the beautiful thing about markets is that each one has unique traits, and they can actually, it's kind of like, this is super nerdy, but if you like ever played Yu-Gi-Oh or Pokemon, and I'm not really a big either one of those, but I just know this reference. They say like, if you have all these different cards in your deck, each thing like plays a role. Like, it's like an artist that each color plays a role in what they do. So like for traders, each market has its pros and cons, and it has its strengths, weaknesses, things that, can help to balance out. Drawdowns in one area can be mended by others. So just something to mention. But I just wanted to also ask that question. It's really important for the audience to think about too. Which markets do you trade and why? Have you considered adding new things to your roster? And do so carefully, right? It's easy to jump into new things and lose a lot of money. So I'm not, both of these guys are big into back testing like myself. It's very important that if you're going to step into a new market, you make sure you don't mess around and take it very seriously. But there are other opportunities out there than just what if you only trade, indices, or you only trade stocks, you only trade Forex. Just consider what other markets may have to offer as well. Miko, Marco, thank you guys for coming on the show here today. We've got your channels linked here in the chat. If you guys in the audience could do us a big favor, please go subscribe to Marco and Miko on their own YouTube channels. If you enjoyed their commentary, keep up to date with them. They're putting out wonderful content totally for free on YouTube. We ask this of our audience because, we bring these guys on. We're not paying them to come on. They're coming on, sharing value with the community. And in return, we're hoping to help them, boost their exposure and just kind of collab with us each week. So make sure to do that if you have not already. Guys, thank you very much for coming on the show today.
Thank you. See you next week.
Yeah.
Bye-bye.
See you guys. All right, guys, we're going to go to our next guest here in just a moment. We got Forex James taking over the show. You guys know him and love him. We've got lots of requests. Where's James? Where's James? So he is coming on. Speaking of more traders who trade wide baskets of things, again, I think that there's this concept in markets or in trading 101, like, oh, only trade one chart. You got to just trade, gold only or Euro USD only. And I really do think that is a good piece of advice for perhaps somebody who's brand new to this stuff and maybe just needs to focus on one thing. But if you have some experience, there's nothing wrong with exploring what else is out there, as long as you make sure that you back test it and you don't overhype something in your mind, So there's a good list of different things you can trade. Personally, I am preferential to the indices and gold, but I trade much wider things than that. I trade oil, I trade currencies, I trade Chinese stocks sometimes, I trade a little bit of everything. So there are different times to be trading different things for sure, at least in my own strategy. Stay tuned, guys. We're going to take a quick break, thank our sponsor, and then James is coming on the show to give you guys some more analysis. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey guys, how's everyone doing? It's good to be back. Had to take a few days off. Got quite ill over the weekend, Monday and Tuesday. Starting to recover now though, so it's all good. So what is it? Thursday. How's all your weeks been so far? Hope none of you have lost money. Hope you've all had a very successful week. Yeah, so as I said, not been too active in the markets recently, so I'm a little bit behind on my personal research, but we can still go over what's going on and how the markets are looking at the moment. So I've still got this position on the S&P. I've been holding this since when was this date? It's the 9th. So almost 10 days actually. It's crazy. But yeah, so far so good. So the indices are on a rocket ship to the upside. Actually, if we look on the Edge Finder here, we can see we've got the Dow, we've got the DAX, Nasdaq, the S&P, the FTSE, and the Nikkei, all reading as bullish. It seems to be the season for the indices at the moment. Now, I'm not sure how much you guys know about seasonal trading, but there's the sort of common idea that sort of in December we start to see the stock markets rally. Obviously, higher spending by customers. I'm not saying that's a buy signal, and it definitely doesn't always happen, but it's something to keep in mind as we head into the end of the year. I actually did take a position on the dollar yen as well this morning. Currently testing the waters, got very low risk on this one. Stop is just below the previous week's low. Looking for a full correction, actually, as we saw today's data come out for the dollar. So we can see got a really nice jigsaw piece or jigsaw puzzle going on here. You can see how it's marked up. Every move here has an explanation. And then today, a really nice confirmation for the dollar to continue moving higher was the core retail sales, jobless claims, retail sales, and the Fed manufacturing index. Very, very strong data for the US dollar. And if we then go and take a look at the yen, we are continuing this trickle to the downside. We've broken below this previous low that was acting as support for a while. So I'm now really looking for a continuation to the downside and a potential correction of this whole move that we saw when we saw the unwinding of carry trades and that sort of flash crash, if you're willing to call it that. So yeah, that's the plan on the dollar yen. Essentially just going to sit and hold this one. If we do end up coming lower and I'm getting stopped out, it's fine, low risk, no problem. If we come up, then I'll look to scale in and round off my risk at 1%. New Zealand dollar against the US dollar still sat in this. It's done absolutely nothing since I entered. It's just been range bound, so there's not much to talk about in that one. My dollar NOK trade, this one's been a little bit frustrating to sit in. So if we look, I entered this one last week and the weekly candle closed really, really nicely, wicked to the upside, respected this trend line, and looked like it was about to form this lower high. However, obviously the dollar is performing very well, so this trade isn't doing too hot. But the positive side is I was entering this position fully understanding the situation that the dollar's in, so I took very low risk. You can see here there's two positions at 0.3% each, so no issues there. And the NOK is still forecasted to gain significant strength as we head into 2025. So happy to hold this one out. And again, if it's stopped, it's stopped. The Australian dollar Swiss is one I'm also sat in. So this was a signal to the Discord. It's currently just hovering just below entry, so drawdown at the moment. This one again is more looking towards a risk-on market as we're seeing the Australian dollar hold its ground and the sort of outflow from some of the safe havens like the Swiss as we're seeing the dollar start to do a little bit better. So we'll see how this one develops. On the watch list, we've got quite a few things. I think the Euro USD is, it's a highlight for a lot of people at the moment. I'm seeing some chart requests. I'll go over some of your charts after I go over the watch list. Did you shave? I did shave. Yeah, so as I said, I had to go out yesterday, but I was really ill the previous 2 days, so I didn't have time to go to the barbers. So I needed to look presentable very quickly. So the way to do that was just shave off the beard. But yeah, anyway, so the Euro USD is melting. Actually, let's see how far has it dropped so far. It's dropped 3.5% with almost no pullbacks. We've had one positive day. And that's about it. And the rest of it is really just wicks. We're seeing no entry points here for swing trades. If you're sort of scalping this or day trading this, I'm sure you could get some good entries. But yeah, for swing trades, it's very difficult to get into, really. I was hoping, well, I probably shouldn't say hoping, but I was looking for this pullback here off this level of support and this 200 moving average, some sort of relief to then present an entry point. but unfortunately, that's not happened. It's just continued this melt to the downside. So we're still looking for some sort of pullback here, whether it's just a retest of this previous support and then test it as resistance, classic break and retest, along with this 200 moving average. That would be an ideal trade, really. But, what can you do? We can't do anything but sit and watch at the moment. So very boring on that front. The dollar CAD, again, pretty boring. Was looking for this pullback here. We had 2 bearish days, and I was like, oh, maybe this is the time when we're finally going to see some sort of pullback in this market. And today it's just proven me wrong. That's not happening clearly. So I'm thinking about scrapping this trade now, to be honest. But we'll see. The DAX, now the DAX is quite interesting. I tweeted about the DAX. I think it might have been yesterday, actually. So I was looking for this pullback here. So I was looking for price to retrace back into this trend line, retest this minor level of structure, come and close the gap that we've got between the 200 moving average. And we didn't get that. So this entry here was fine. We did have this break and retest, but for me, it's still just a little bit too high. I don't like entering on positions like that. I needed a deeper pullback, which for now we just don't have. So maybe if we come down again for this trend line, I'll look to enter. But yeah, again, as I was saying, we do have the DAX score is 9, so it's just behind the Dow as the most bullish. The euro pound, again, very, very good trade here. However, the problem is it's been very difficult to really get in. So I was short on the euro pound some point around here. And then as soon as I entered, we got the news that the Bank of England was going to start cutting rates, which of course weakened the pound and strengthened the euro pound overall. So I stopped out there. And since then, it's been very difficult to really get an entry because it's been choppy, but it's been choppy to the downside. It's not been a smooth run. So I'm still looking for possibly even just a day trade. The main level I'm watching here is this level of support through here at the 0.82. So yeah, we'll see if we can get some sort of pullback, even if it's, again, just a break and a retest. We might be able to get, what would this be? Let's see. If we took it to here, yeah, maybe a 1 to 1.5, maybe a 1 to 2, depending on where the stop is. So yeah, not too bad, but not ideal. Copper as well is looking very good. So the situation we've got with copper is the technicals look beautiful. So someone in my Discord this morning was pointing out copper and said, oh, I'm looking to enter copper. It follows the strategy, which is the sort of trend. We've got the 200 moving average that's pulling into price here. We've got the fib and previous structure. The problem is the macros for copper just do not seem promising at all. So let me just pull up the info here. So here, this is a good tip for any of you guys that want to have very quick outlooks on things. Go to Trading Economics. You can go into your currencies, commodities, stocks, whatever. Click on what you're interested in, and you can get a very brief breakdown here on what's going on, why is price moving the way it's moving, and that can help give you some clarity in the markets. And it's completely free. So it's 100% free website. Copper futures slipped below list. I'm not going to read all that because I'm lazy, but essentially it's just because of China and also the Fed rate cuts. So what's going on is the Chinese stimulus has faded, thus resulting in lower production in China. Again, in turn, lowering the demand for copper. So we are seeing copper decline. It wouldn't surprise me if we see copper continue this move to the downside. So it's not the best trade, really. Although, again, the technicals look good. The drivers for this market just aren't there, really. Now, Bitcoin. So I say this every time I look at crypto, but I'm not a crypto trader. But it did pique my interest. I saw Nick talking about it this morning when I was watching the stream. And it does look really good. So we're following now these fib pullbacks, or we've had the previous pullback was a fib pullback. We've just rejected this 200 moving average as well. And now we've broken above this trend line. So really what I'm doing is looking for another fib pullback. So if we can come back another 50%, meet this minor structure here, and then enter somewhere in this zone and go for possibly sort of maybe a 1 to 2, something like this, I think is reasonable. I'm not in a position yet where I'm super bullish on Bitcoin. But again, following the momentum, I'm happy to do that. It's also reading as +8 on the Edge Finder, which is actually quite good. The only negative thing here is interest rates, which is interesting. So keep that in mind. But yeah, it's on the watch list. But again, I don't really trade crypto. I'm not desperate to get in. Australian dollar yen, looking to maybe get into this one. So I think it was last week someone asked about this, and I said it's not the best option. And that again was mainly just driven by the drop in commodities and the Chinese stimulus that's fading, or faded now, I should say. But I'm starting to lean a little bit more towards wanting to take this trade. So I need to do some more research. As I said, I'm not too caught up on what's going on this week. I've not done my research, but yeah, we'll see. I might come back tomorrow if I am on tomorrow. I can't remember, or Monday. So let's have a look here. Let me catch up on the chat. Excuse me. Can you do AUD USD? Yeah, we can have a look at the Australian dollar. So, yeah, I'm not sure about this one, to be honest. Although it does seem quite bearish due to the really good data we've had for the US and the the strong momentum we're seeing is on a rip to the upside. The problem is that, yeah, again, I'm not 100% sure on where I sit with the Australian dollar. And if I was going to go short, I would need to see this 200 moving average break, this daily 200 moving average, along with this level of support. So I'd really need to see either a clean break with enough momentum to enter on, or the retest and a continuation to the downside. So yeah, overall, I think I'm more leaning towards the bearish side here, but I'm not convinced enough really to add it to the watch list. I like watching James because he shows FX pairs. I show everything apart from crypto and stocks. Hi James, hope you're feeling better. Yeah, I do feel better today. Thank you, Lee. Pound Swiss. So let's see. Let's have a look at the pound index. So it seems to be gaining some ground. Oh, actually, maybe not. So the problem we've had with the pound was it was on a rally to the upside, really. I've been saying this, but it was the perfect trend, really. So if you were, when you start trading, you look at these, what they call these tutorials, and it's like, oh, draw trends like this, and it's just up, down, up, down, up, down. It was, following that almost immaculately, which is very rare in the FX markets. And suddenly we had the break, and that was due to the fact that the Bank of England went from sort of neutral to hawkish to more of a dovish stance, saying that they're cutting rates. So that obviously started getting priced in, pushing the pound lower, and it seems to have now stabilized. The problem is, again, because I've been ill, I've not really caught up with what's going on this week, so I'm not sure if any data's changed. But looking at the Swiss, it's... I'm just having a think. Give me a second. Yeah, I'm just not super convinced on the risk-off market anymore. So what we've got is the Swiss not really doing too much. We've got the yen dropping. Gold's not doing too hot at the moment, obviously due to the positive US data. So it seems like the risk-off appetite for Swiss isn't quite the same as what it was. So I'd be more looking to really go long on this one. And this is just, again, off outdated information from sort of last week. So I might be completely wrong on this idea. But yeah, I would more really be looking to buy support, sell resistance in this situation. I'm not saying to do that. I'm definitely not advice or suggestions. I'm just saying from my uneducated opinion at the moment. Hope you're feeling better. Yeah, I feel a lot better. Thank you. In AU buy, gold buy, Euro New Zealand sell. Euro New Zealand sell sounds really solid. The euro is just plummeting. Really not looking good. I mean, look at this. Crazy. Yeah, I'm a bit jealous of anyone selling the euro at the moment. I just can't find any entries. There's strong Aussie news today. There was strong Aussie news today. That's true. We had, I can't see it on my calendar. Hold on. Where was it? Here. So we had employment change increase, more people employed. We had unemployment go down. So yeah, the labor market in Australia looks a bit more healthy. Do you think Fed will hold cutting rates in November? The data is positive and no need for them to rush cutting. That's a good question. Should we see, actually? Hold on. I'm not sure about them holding. However, I'm almost certain they won't cut 50 again. I don't think that's really something we should have in mind. So it seems like more of a 25 basis point cut is the expectation. So yeah, I think holding probably not, but yeah, a smaller cut. I don't see that being too much of an issue. Check dollar Swiss. Yeah, we can check dollar Swiss. So yeah, this market seems like it would be quite a nice buy, actually. Again, going off what I said earlier about just having a little bit of a feeling now that the markets aren't quite as fearful as they were. Although this isn't a huge downtrend, actually. Let's see. Yeah, I'm not too sure I would want to buy this market, but it doesn't seem too bad to go long. Again, relying on the recent data on from the US, I think dollar Swiss is probably quite a straightforward one. Welcome back, James. What do you think? What do you rely on most often from the edge finder to support your thesis? I rely on the whole sentiment, really. So what I do is the way I trade is I will build my own thesis. So I'll look at bank reports, articles, news releases, and what's really driving the market. So I'll go into as much detail as I can. And then let's say I come to an idea that the euro pound is bearish for a central bank divergence. And then I see that on the edge finder is the most bearish reading. I'm saying, okay, well, my thesis, my research says it's bearish. Edge finder says it's bearish. I need to look to go short. So I don't look at an individual piece of data. I use the whole software to build something together and to match my pre-existing research, if that makes sense. Pound dollar. Yeah, we can look at pound dollar. Oh, we finally had the break. So last time I was here on the stream, people were asking about the pound dollar, and the problem I had was that we were just stuck and consolidating on this support, and now we seem to have broken it, which is a good sign. So I would really be looking to go bearish, or go short, I should say, and maybe something like a 1-to-1 here isn't really a bad idea. So the reason I say that is because, sure, the pound is stabilized, but the US dollar is still on its rip to the upside. So this trade would primarily be playing the US dollar strength rather than anything to do with the pound, and sort of using the pound's flatness, I guess you could say, as a proxy to drive the US dollar further down, or getting the trade to ride it further down. But yeah, the thing is, I don't want to hold shorts into this 200 daily moving average. So if we look previously, we've respected. I don't want to get down to here. Data changes and I'm still holding shorts and it bounces off and uses this level. So yeah, that's kind of just my issue there. So I'm happy to take this sort of 1-to-1 idea and then reconsider it once or if we break this level. Which MA? This is just the 200 daily moving average. Is EMA exponential. US 30. Okay. S&P 500 is going down. Is it? Let's have a look. Yeah, nothing drastic. Yeah, US 30 is also one that I would be quite happy to get into. The problem is actually trying to get in is a little bit difficult. I think, let's see here. It looks like I missed an entry actually. Yeah, I did. I could have gotten in here really. But obviously I didn't, so it doesn't matter. But yeah, I'd really be looking to go in again on the similar thing. So I'd be looking for this 50% pullback. Oops. Here, looking for this 50% pullback, and then entering somewhere along these lines. So something like this. So again, the main reason for this is that the Dow is the strongest reading, I think. Yeah, the strongest reading on the Edge Finder at the moment. So it seems like a bit of a no-brainer trade, really. So if we're getting a huge or really strong reading and the market's ripping to the upside like this, all we really need to do is wait for a pullback. So it should be quite simple. Obviously, timing pullbacks can be a little bit difficult at times, but generally speaking, the idea is just to keep buying until we get some sort of data to suggest that that idea is no longer valid. Pound New Zealand. So the problem here is I don't really know at the moment what's going on with the New Zealand dollar. Let me see if I've got data from last week. Just refresh my brain a little bit. New Zealand dollar is under pressure due to expectations of interest rate cuts by the RBNZ, exacerbated by weak economic indicators and broader risk aversion. So again, that's last week's data. Things might have changed. I'm not too sure. However, speaking just on that, I'd really be looking to go long. So although this chart looks a little bit messy at the moment, we are still respecting this structure. We're still holding above. The moving averages are still bullish. So maybe just look for another, or just look for an entry if we get another rejection off this support level. The weekly looks a bit ugly. The daily looks quite ugly as well. Yeah, it's not my favorite chart, to be honest. Although overall, I'd really be looking to go long. Oh, gold. Yeah, let's have a look at gold. We haven't looked at gold yet. Or I haven't anyway. Gold's still ripping up, even though we had really strong data for the US. Excuse me. So let's see. I don't think we have a score for gold on the Edge Finder, actually. Let's gold and silver. So it's actually more bearish than anything else. So we've got a score of -3. The GDP is flat. Manufacturing services. So yeah, everything's bearish, really, apart from the manufacturing PMIs. So that's not a good sign. If we're getting a bearish data reading for gold and the market's still heading to the upside, it's a little bit risky because I'm more leaning towards selling gold, but I don't want to sell gold when it's still creating new all-time highs. It's a bit of a silly thing to do, in my opinion. So let's see, how could we do this? Yeah, it's tricky. I mean, it's just still not in any position to really do much. I think the only way we could really go in for a short position on gold is if we create a lower low. So if we can come down from here, create a lower high, lower low, lower high, then we can start entering on these sorts of pullbacks here. But for now, you can't do anything, just sitting on our hands. Hey, why not trade intraday trends? I do, actually. I do trade intraday here. So this is my sort of shorter term trading setup. So I use pivot points. In fact, here's a great example. I didn't take it, but you can see the daily pivot was respected just before we had the US news, and this would have been a great trade to be in. But yeah, I'm just not active in the markets this week. I had a bit of a losing streak the week before or last week. Then I got ill, and it's just one of those things. It's been a bit of a bad month for me, really. Not necessarily in terms of trades, just in general. Australian dollar, US dollar. We've already covered that one, but we can have another quick look. Yeah, so this is the thing with this pair. It looks really bullish. I mean, we've not quite come down to this 50% level, but we are almost there. We are also respecting the 200 daily moving average. So the technical setup is bullish in my eyes. The problem is that the US data is more telling me towards a bearish market here. Let's see. Yeah, and the weekly is still moving to the downside. We continue to respect this weekly average here, respected, rejected here. So yeah, it's kind of a no-go zone, really. I feel like most of the time I come onto the stream, I'm more just saying I don't like this trade. But there you go. At least I'm honest with you. Nice turtleneck. Thank you. It's actually really itchy. So yeah, let me see if there's anything going. Let's see what the news is next week. Actually, I don't think I'm on with you guys tomorrow. Hold on, here we go. So we've got interest rates for the Canadian dollar, jobless claims. Actually, next week's really quiet. That's interesting. I think it's probably one of the most quiet weeks we've had in a while, which is nice. Can I get your analysis on pound New Zealand and dollar Swiss? Yeah, pound New Zealand is ugly. Looks more towards a buy though. Where's it gone? Here. Yeah, not really a very nice chart to look at, to be honest. There's not really any trend. We're just sort of ranging. But yeah, overall, I think I'd more be looking towards a buy position. I think the pound is still more stable than the New Zealand dollar is. But yeah, again, just not really something I'm interested in. Dollar Swiss. Yeah, again, not really interested on the dollar Swiss. It depends on how the data goes. I would actually really like to go short off this resistance, but that would require some negative news for the dollar to start coming out, and it doesn't seem like that's going to happen. It seems like the dollar's on its way to recovery. So yeah, I'm kind of staying away from this market as well. FTSE, yeah, we can have a look at the FTSE, and then we'll move on to oil. Actually, yeah, oil, I think a lot of people are stuck in oil. I'll explain why shortly. So the FTSE, and this is the last time I'm going to say this on the stream, I promise, or for today, is probably the worst. Well, yeah, it's an ugly chart. It's the worst chart I think you could really try and trade. So if you look at this, and then let's compare it to the S&P. There. So look, so obviously this sort of pink line is the S&P, and this these bars down here are the FTSE. Why would you ever try and get into buy positions or even sell positions on the FTSE when you could trade the S&P? The FTSE is just, it's a mess, and it's horrible, and it's ugly, and it's horrible to trade. It's hard to trade. It's, you know, no, yeah, not anything, in my opinion, worth looking at. So if we look at this range, it's been stuck for 116 bars on the daily charts. So around 167 days that it's just done nothing. So I was actually invested in the FTSE for a while. I just sold all of my FTSE shares and put them into the S&P. So yeah, oil, let's have a look there. So the problem with oil is it was super bullish, and even I got trapped. Well, I didn't get trapped in oil, but I got stuck in oil for a short period. So I took this trade here, and I went long somewhere around there with take profits up there. And it was more anticipating that, excuse me, that we would continue to see supply concerns within the Middle East. And we didn't get that really at all. And now we've got essentially a surplus of oil. So we've got too much oil. The supply is there. There's not enough demand. So we are seeing oil start to head to the downside. I don't see any factors for oil to head to the upside anymore. We have also just rejected this weekly 200 moving average as well. So it seems more to me like a bearish market. So I would actually be looking to short oil rather than go long. I never trade FTSE for those exact reasons. Yeah, no, the FTSE's horrible. Pound Swiss sells. I wouldn't be selling the Pound Swiss really. US 100 silver. Okay. Silver. Yeah, silver seems to actually be quite a nice position to get into. It seems to have more potential than gold, because the problem with gold is there's no entry, it's at all-time highs, whereas silver, it's creeping higher, but it's slow and it's presenting technical opportunities. So all we'd really need to do is just look, and we've actually had one this morning that I didn't take, but this rejection off this 50% pullback, and maybe actually if we can get this candle closed bullish, I might look to go long. So here, something like this, and this is just following the momentum. There's very little in terms of market drivers behind silver that I'm interested in, but we can see the trends to the upside. It's following these sort of fib pullbacks that we're seeing here. So yeah, simple stuff really. But yeah, just don't get overconfident in the commodities, because as I said, gold's got a bearish reading, and we've got really good US dollar data coming out as well. So yeah, NASDAQ US 100. Let's see. I'm always going to look for buy positions on the NASDAQ and the S&P and the Dow. So most of the time, I'm actually just sat waiting. So in this case, what I'm more looking for, what do I want to see? I guess the first thing would be a break of this previous high. And then let's see. Yeah, so I'd be happy actually to buy straight out of this this resistance. So if we can close above with a nice strong bullish candle, stop loss somewhere below, and take profit up here or wherever, just trail stops, and then we've got this next resistance here. So the way I would really go about this is enter, and then likely we'll see some sort of reaction off here, and then eventually we will break above. It might not be as soon as I want, but eventually we will, and then scale in here, move this stop to break even, and sort of trade it like this. But yeah, right now there's nothing here really to enter off, unfortunately. The New Zealand dollar, yeah, I'm looking to go short. Well, sorry, I am short on the New Zealand dollar, but it's just not really done much recently. So you can see my entries are down here. So E1 and E2, entry 1 and entry 2. Stop loss is pretty high, but that's fine because I'm looking to hold this position for quite a while down to sort of the 0.055 level. So this is more of a position trade into next year rather than sort of a swing trade or anything. But yeah, overall, quite happy to just sit in these short positions as we see the dollar continue to climb and the New Zealand dollar continue to weaken at that point. Yeah, so it seems like we've actually had a correction really from the US news. Interesting. This might be a good opportunity on euro dollar. Actually, if we can see sort of this continuation of this rejection, maybe we'll start climbing a little bit higher and allow some sellers into this market. Because at the moment, what can you do? Euro Swiss. Yeah, we can have a look at Euro Swiss. Yeah, so I was short on Euro Swiss actually. Problem is, so I entered. Where did I enter? I can't remember. Oh yeah, here we go. So I entered. Oh, sorry, my fibs are the wrong way around. Here. So I took this trade. I entered short when we saw these rejections. Took an entry or had a sell. Had a sell limit at this 50% level. With a take profit down here, and we just got ripped apart on this one. And it's just one of those markets that's very difficult to really get into unless you're willing to have a stop that's wider than this range. It's really difficult because it's just choppy. It's just sideways. So yeah, it's not really my favorite chart, although I would still more lean towards the short side of this market. Obviously, with the euro weakening, the Swiss isn't my favorite, but it's still stronger than the euro. So yeah, overall, I'm bearish, but it's just not the chart I want to trade, really. Sell pound Swiss, sell, full margin. I guarantee, watch it melt now. Let's watch it. Let's have a look. Pound Swiss. Would it make sense to short both NZD, USD, and Euro New Zealand? I mean, it would make sense. You're shorting the New Zealand dollar. Oh, wait, sorry. No, you're not. So if you're short New Zealand dollar, US dollar, and on Euro New Zealand, you're buying and selling the New Zealand dollar. So your risk is essentially zero because you're buying and selling the same assets. So by proxy, you're technically buying the US dollar, selling the euro. Yeah, so by proxy, you're actually just selling Euro USD. So let me explain that. So if you are in a New Zealand dollar buy and you're in a sell, your risk is null because it doesn't matter what happens with New Zealand dollar. Your risk is essentially not there. However, if you are in a short New Zealand dollar, so you're then buying the US dollar and selling EUR or euro, to the downside, it's just these two that you're in a trade on. So you're just selling Euro USD. Obviously, it depends on where your stops are and things, but you get the point. It depends on obviously the trading style, but that's the logic that I see there. Pound CAD. Let's see. I don't like the way that this chart's moving, actually. The overall setup actually does look quite good. We've had a healthy pullback, but we are rejecting this moving average. We're heading to the downside. The H1 also looks very bearish. So yeah, I wouldn't really get into this, to be honest. Let's see. Yeah, the weekly candle's bearish. We've just had a strong bearish daily candle. Yeah, I'm not sure. I think really for this one, you'd need to see the pound data coming out positive, and you would sort of be banking on oil prices continuing to drop as well, and that would flip this market bullish. But at the moment, yeah, it's not in an ideal place. Hey James, what do you think about Labour's mini budget? Will sink the GDP like Liz Truss did last time? No, I don't think so. I've not actually looked into the mini budget properly. It's on my to-do list. I've just not gotten around to it yet. It won't be the same reaction that we saw from Liz Truss's because hers was an outlier. It was particularly bad. However, I do still see it will be as a negative for the pound, and that might actually be the catalyst that I get into my long-term short pound positions. But yeah, I don't know. I can't give you a solid answer yet. As I said, I've not really looked into it too much yet, unfortunately. Actually, let's tell you what. We've got some Actually, let me see the timings here. Let's see what time I've got. So Chris at 10:15. Okay, we've got about 15 minutes. Let's see. Our fiscal rules are non-negotiable and will apply to every decision taken by the Labour government. Revenue 2028. Okay. Yeah, I'll have a proper read of this off stream, but yeah, I don't think it will be good for the pound overall, but I don't think it will be as detrimental as we saw with Liz Truss or Liz Truss. Can't remember what her last name actually was, to be honest. Let's see. Is there any setups that are coming about? Australian dollar, yen, not much here. Bitcoin. I do quite like Bitcoin. I'm going to delete this so it's a bit more clear. Delete this as well. Yeah, I think maybe next time you see me, I might be in this Bitcoin position. Something maybe like this. Depends, obviously, what time frame I execute on, how price develops. But so far, it looks like it could be having a nice pullback. Copper, I won't be entering that one. Pound, euro, pound. Yeah, euro, pound. I would keep your eyes on euro pound. Try and find some sort of entry. At the moment, it's not ideal. But if we see either a pullback up to resistance and then a continuation to the downside, or we see the break, the retest, both of those are great situations to get into shorts. The economics and the macros for this market are great for bearish positions. The DAX, yeah, again, the DAX looks great. Yeah, I'd just like to really see a deeper pullback here, which so far isn't happening right now. Dollar CAD, we can get rid of that. And Euro USD, yeah. PS, I'm in the same boat as you regarding the UK economy thing. On paper looks good, however, normal people don't see positives. Yes, I think that's kind of the problem, is that, yeah, on paper, sure, it's fine, but what we've got to realize about the UK is, and I think this is quite well known, but everywhere in the UK is a third world country apart from London. Essentially, I mean, if you took London out of the UK, the rest of the UK wouldn't be anywhere near as strong as it is now. So once that sort of catches up into London, I think we'll start seeing some significant changes. But yeah, overall, I would love to get short on the pound. It's just not quite there yet. Why does only euro yen seem to be selling off? Eric, what news did we have today for the euro? It's quiz time. I'll just tell you here. So we had CPI from 2.2, forecast 1.8, actual was 1.7. We also had the rate decision, so they cut their rates. So it was 3.65, it's now 3.4. So there you go, two bearish factors for the euro. We've had inflation and a rate cut. So that's why euro yen is dropping. But yeah, the euro just doesn't seem to have anything positive about it at all at the moment, really. Where is it? Here. Oh, luckily I'm not in that. But yeah, euro. Nah, I wouldn't be buying euro even if I was paid to do so. It's a horrible currency right now. It's far from a third world country. It absolutely is a third world country. Everywhere outside of London, Manchester, Leeds, maybe some of the other major cities, fine, fair enough, that you can make that argument. But everywhere else, it's not good. I mean, if you look at the seaside towns, for example, they were huge for the economy back in sort of the 80s and 90s. and they are all essentially bankrupt. We've already had councils that are bankrupt. So yeah, this country is on its last legs, really, unless something serious happens to fix it. Just trying to see if there's anything worth talking about here in the markets before I start yapping about other things. Yeah, I've got about 10 minutes left. So if you've got any final questions before I disappear for the day or for the week, let me know. Yeah, I think euro dollar is kind of like it's just such a good trade that it seems no one can get in on. The amount of people I've seen talking about euro dollar to the short side, it's unbelievable. It seems like retail is actually like majority right for once, but no one can get in. You're right, mate. In the south of England, it's pretty much every travel to London, travel into London for work. Yeah, exactly. That's the thing. London is the hotspot for work, but no one can afford to live in London. So when I was living in London a couple of years ago, I was paying, and this was sort of 2021, 2022, roughly. I was paying, I think it was like 1,300 a month just to live in it was just a studio flat. So I had a bedroom, a kitchen, a bathroom. That was it. And 1,300 a month, it's kind of like, what a young person would expect for like minimum wage, really. So it's just not ideal. Younger people can't afford to live in London, and it's going to catch up soon. The UK countryside is pretty but struggling economically. Absolutely. If retail sales come in lower tomorrow, more sales on pound, absolutely. I need to look into what the debt is in the UK actually, because that must be climbing up. What about Slough? Yeah, Slough. Wheat. Yeah, we can have a look at wheat. I'm just gonna pull up. I don't really do much research on wheat, so I'm gonna have to rely on this here. Wheat futures fell to $5.8 per bushel after the USDA raised its global wheat supply outlook. Despite lowering its 2024-2025 production estimate, the USDA increased its ending stock forecast to 257.72 million metric tons, exceeding expectations by 1.6 million tons. However, wheat prices remain close to their recent 3-to-1 2-month highs of 6.2. As concerns over Black Sea exports help limit losses, Russia, the top exporter, has set a de facto price floor by asking exporters not to sell below a minimum price, while also increasing export duties. Additionally, dry conditions in Russia are raising worries. So that sounds relatively bearish, neutral to bearish, I would say. And you can actually see that reflected on the chart quite a lot here. I mean, we've not really done anything on wheat for a while. Yeah, to be honest, you probably sick of hearing me say this, but it's not a chart I've looked to trade, really. Copper, we've already looked at copper, but essentially the problem with copper is there's no demand for it, really. A lack of demand for copper. With the failed or the faded Chinese stimulus, there isn't the money there really to push the production, thus lowering demand, thus lowering prices. Why isn't the euro yen dropping that much compared to other euro currencies? Because the euro yen is two very weak currencies. So if you look at something like euro dollar, the dollar is performing very well, whereas the yen is performing very poorly. So it's, actually, let's look here. So if you look at the euro here, this is the euro index. It's just falling. If we look at the yen index, it's also just falling. Now, again, if you go and look at euro dollar, the euro is falling, whereas the dollar is rising. So we've got enough strength there to drive the market. Whereas euro yen is just a bit of a, not a good one, really. Oh, it's Chris. You got Chris on next. So when I leave, don't leave the stream. Got 5 trades on EU since yesterday. 5 trades, crazy. Yeah, I mean, actually, euro dollar has been great for short-term trading. I mean, just look at the way it's followed this, even just a 50 moving average, or even, you know, if you look on the 15-minute, my day trading strategy would have made so much money this past couple of weeks, actually, but or even just this week, but yeah, just not been on the charts. But yeah, it's been a waterfall to the downside. It's probably been one of the easiest short-term trading situations or conditions, really. Look at this. We've got rejection of pivot point in 200 moving average, rejection of pivot point in 200 moving average, pivot point 200 moving average, pivot point 200 moving average. It's just rinse and repeat. So yeah, just make sure that you're not the one trying to sell euro dollar when it finally starts moving to the upside again. What time maze are those? This is the 200 and this is the 50. What's the ticker for those currency indexes? We've got the DXY. Actually, I'll just show you on here. FX index here. So we've got the DXY for the US dollar. Sorry, these are DX1 exclamation mark for the dollar, 6S1 for the Swiss. We've got the 6N1 for the New Zealand dollar. We've got the 6J1 for the Japanese, or for the yen. We've got the 6E1 for the euro, 6C1 for the CAD, 6B1 for pound, and 6A1 for the Australian dollar. Oh, wait, hold on. I've lost my thing. There we go. So actually, this chart is the DXY. I wish I got into EU earlier. Keep that swinging. Keep that swing. Yeah, that would have been lovely. Swiss yen, 104 end of day stamp it. Let's have a look. Swiss yen. CHFPY 104. I don't. Oh, 174. I was so confused. I was like, are you able to see the future, or what? Are we going to have some sort of crash? 174.0. Let's see. Yeah, I could see that quite easily, really. I don't think that's a bad call to have. Quite easily reach this previous high. Waiting for lower time frame oversold divergence on EU. Scalping shorts till then. Yeah, good stuff, Phantom. I'm in Euro USD short since nearly 1 month. Marcus, I'm very jealous of you. That must be an amazing trade to be in. I was short on euro dollar during all this move, and then I sort of not gave up, but I closed out a lot of short positions. I actually managed to recover almost all the losses during this period here, and then once I was out of those, I kind of moved my attention elsewhere. And then, you know, this is where I would have, you know, if I got my timing properly, I would have been in big bucks here, but it's just the way it goes, unfortunately. One of those things. Seems EU might reach 1077. Yeah, likely so. Yeah, I'm just thinking. Yeah, it's just one of those markets at the moment where if you're not in anything, you can't really do much. It's just a waiting game, which is very annoying most of the time. Yeah, there's just nothing to do here at all. Held through the drawdown over weeks and weeks, but now it pays off. Yeah, Marcus, that's the choice I had to make. Was, do I want to hold the drawdown and I couldn't, because there's other positions that needed allocation, so I had to just cut some losses and take some profits and move over. But yeah, in hindsight, definitely should have just held it. I get a nice 3% after that 104 move. Good stuff, Derek's. This year is ass for swings. Yeah, the markets have been very volatile this year, to say the least. I think mainly profiting from intraday and scalps. Yeah, that's why I do both. It's because sometimes you just can't get into swings, and then day trade is kind of the only option really in certain situations, like euro dollar now. These swings, it's just not possible to get in. But again, if you're day trading this, you could have been in and out quite a lot. So guys, anyway, I am going to head off. Thank you all for joining. I don't think I'm on tomorrow, so I'll be back next week if I'm invited back. But yeah, enjoy the rest of your weeks. Enjoy your weekends. Don't lose money, and I'll see you all later.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, happy Thursday. Trying to share my screen here. There we go. Let's get after it. Oh yeah, can you guys bring up my screen? Thank you. All right, hey, I'm doing an update on the Pulver alerts. I closed out all of my SPY calls this morning. Hopefully you did the same thing, paying attention. We have a couple trades that we're gonna pop around to. So here is the SPX this morning. I've got a little strangle running today. 58.55 looking pretty good, trying to go after a small take profit. And hopefully price just oscillates here. We had a nice gap up, filled the gap or close to it, very close to it. But the nice thing about today on the SPY, was that we went from a close yesterday around 582, and we also had a nice little positive drift up. So I was in, and I shared this in my Pulver alerts, I was in the 584 and the 585 and the 586 long calls. So I stacked up some long calls yesterday. I closed out a couple of them. So my 71-cent debit closed out today. So here are the results. The 585 long call, I paid 71 cents debit for. When we talked yesterday in session, it was trading for about 65 cents. Okay, today I closed for $2.47 debit or credit, sorry. So that's a really nice win. That's over $1.70, right? $1.76. So $1.76 profit per contract, and that is about a 246% win. Not bad. Not bad. And then the 584, the 584 and the 585 and the 586. I got in those trades for about $1.91 to $1.94. And it closed out today for anywhere between $4.90 and $5.26. That was my best close on the day. So credit and debit, and those wins added up being around 100 and I want to say 176%. So the net gain, what is that? $2 and change. I'll just take the math based on the lower one. So if I close out for $4.90, I paid $1.91. That's 156% gain. That's pretty good. So 156% gain, that would be 2.99 profit per contract. Okay, so I'm hoping that you saw the same thing I did. The strike price was what I was after, and so when we opened up there this morning, that was perfect. What was nice is pre-market, I went in and I removed all my limit orders. I had a limit order in at $3, $3 on this order, and it was actually trading above $5 when I started trading this morning. So good win on that one overall. I'm pretty happy with that. Very nice. Yep. Jay says close out the daily profit play for $50. Awesome sauce. My trade's looking pretty good. I'm going after a slightly bigger profit because I narrowed the width on it, but price is cooperating on the SPX this morning, which is nice. And that is, let me see where we're trading at right now. 85 cents. So I'm close to the take profit. This is going to get, hopefully this gets filled. We're trading at 80 cents mid. Let's go. Give me that 25%er. If I bump this up, I mean, you can trade in 5-cent increments on the SPX. So if I bump up to 85 cents, I could probably get filled on that. 85 cents. So if I go $1.10 minus 85 cents, I take 25% or 25 cents divided by $1.10. That'd be about a 22.7% profit. I mean, it's okay. I could take the profit right now, but I'm just going to let it sit there and hang out and try to give me that full 25%er. But overall, pretty good day. And, we hit a fresh all-time high today, and the market looks like, are we celebrating all-time highs when it actually pulled right back? Maybe. It doesn't matter. But retail sales, the numbers came in pretty solid this morning with the U.S. U.S. retail sales were pretty solid. The revisions were good. Unemployment claims weren't scary. So all good. Ken says morning daily profit play in at $3 credit out at 225 debit. Damn, Ken, you're going after a little bit bigger take profit, dude. Good stuff. Good stuff. Cool. Okay, so I'm updating. I'm going to do a little reply in this one. So can I reply to the reply? I think I can. SPY, long calls, all of them. Closing 584, 585, 586, long calls for profit at opening bell, which I know is past. But our price target of 585 was reached with this morning's gap. Closing all for nice gain. So anywhere between 246% return on capital, 156% return on capital. And that deserves some dollars. Good. Okay, and we're right back to center, looking pretty good. Hopefully my trade here will be knocked out for about 80 cents in a little bit. I am showing some P&L to the downside today, and a lot of that is attributed to some China stocks. I'll go to the entire portfolio. I'm just going to do some reviews. So my P&L in the day, Baidu is down, TSM. So I'm down on TSM, but the trade is out to next week. Now, I realize that I could be totally wrong on TSM. This is behaving a lot like Micron did, but what I hopefully learned from Micron, and Tony, to answer your question, 0. I don't drink caffeine. So I am a soda water guy. I just have a lot of energy when it comes to trading. Okay, so TSM, I have this trade running. I need to see if price will revert and try to gap fill by next Friday. It's possible. There's no real risk to the trade. I mean, I'm going after, I've got about $8 risk on the trade for $12 credit. If price comes back into this yellow box, then I should be able to see some quick profit on this. So I'm looking to see if price will gap up and then start to fill the gap. If we come back and just, test the candle low, not only fill the gap or even attempt to fill the gap, then this trade is going to get profitable pretty quickly. So that $12 credit hopefully turns into like a $10 debit, $9 debit, $8 debit, and I'll look to manage that. So the learn from Micron is I went out another week, because Micron, I think the trade came out like Wednesday and I had it expiring on Friday, and literally Monday it was back into profit and it would have closed out for full profit at like 650. So I'm going out another week on TSM to see if this will actually pull back a little bit and try to fill this initial gap, because we did go beyond the expected move, like quite a bit actually. So this was from the close yesterday to the open today. That was an 8.43% move, and we pushed up even higher. And I mean, I had the thing sold at 207.50, which would have been $20 wide, and we were looking at like a $12 to $15 move. And it made from point to point, I mean, it opened up about 17 points. Yeah, about 17 points higher, and it's supposed to move like 12 to 15. So anyway, we'll see what happens. But that's TSM. That's out to next Friday. We also have Netflix, which comes out today after market. and we'll see what Netflix does. We're down to 693. Good Lord. Well, I'm hoping that this is an interesting sell-off before earnings. I don't know if this is a sign of things to come, but we'll see what it gives us. I do have 2 bull call spreads on Netflix. I took one yesterday. That's about $25 above the expected move, or above center price. That was around $700 yesterday. So we're going to have to see a big fat surprise to the upside if I'm going to get paid on this. So my risk on the trade, I took 2 bull call spreads. I have 90 cents on one and 83 cents on the other. So I'm all into the trade for $1.73 with a max profit of $5. So if I win, which means price just has to go back up to these highs, okay, if I win on the trade, then I walk away with $5. I paid $1.73. I make $3.27 for a risk that, I'm willing to stomach if I lose. But we'll see. But we've got to have a pretty big move to the upside on Netflix. If it drops, then I'm going to lose on the bull call spreads. But I also have this is a 1-1-1 trade. So I have a 600 by 595 and a 550. I'm willing to take shares of Netflix at 550, and I would take the shares technically. Trying to think here. Let me check on my Netflix trade. I wish there was a way I could search in my thread to find it. So let me actually 1 second here. I'm going to edit this one to put everybody on it. All of them. Okay. I'm going to search in the stocks section for my Discord. Let me search for Netflix. So we got Snapchat in there. Netflix. Okay. So I know when I took like MicroStrategy, Netflix, and a couple of other trades, I put in that 1-1-1 trade, and then I added in the hedge to take off some of the risk. I'm still willing to own shares of Netflix if we have some big fat move to the downside. I'm just trying to find it. Disney, Lululemon, Micron, SPY, Microsoft, FXI, JD, Meta, Netflix. Here it is. Oh yeah, that trade's out for a while. That's a 12/20 expiration. So I collected 250 credit on that one, and then I can trap the profit. If I own the shares, I'll own the shares at $542, which would be a discount. Current price at $542. That discount would be, I would own Netflix shares around 22% lower. I'm okay owning shares of Netflix. Okay. Because the premiums are so high. Like if you were in the top strategy session I did this week on Tuesday, I think at 4 p.m., I talked about, Nick chimed in and talked about his trades on Tesla and how quick you can repair it. I think that's one thing I could do with Netflix. If I could take the shares, I can allocate the capital. I know it's expensive to have 100 shares in Netflix, but the premiums that I could keep over and over again for a 2 to 4 week window, I could probably lower my cost basis by $10, $15, $20 in a very short amount of time. So it should be an easy trade to repair if I own the shares. But hopefully what we're seeing here is just a pull back to the 50 and then a nice move with some momentum to the upside. And this just becomes a buy the dip. Now, Netflix has also hit the 100 period, hit the 100 period. So if we pull back here and have a gap fill, I might just put in a credit spread. I'll eat the bull call spread because that's small loss. But if we have a gap lower, I'll probably look to put in a credit spread and fill the gap and see if that is a profit trade for the next maybe 30 to 45 days. Okay. All right. So those trades are running right now. Keep an eye on those. And I do want to take a look at some of these China plays. So Alibaba is pulling back. We're still at that 38% level. If we go to Baidu is just below the 618. This son of a gun. We're not getting the follow through that I like out of this China stuff. One thing, I don't know if the election is going to have anything to do with China. If there's risk appetite out there in the U.S. and it flows into China stocks, I don't know. If this comes all the way back down to where this thing started, I will be really annoyed. We'll see what happens. But JD is down to 38.98. I did buy some shares, and I'm looking to repair this. So I think my covered call at 43 is probably mostly profit. I can probably do a quick roll on this. So, and also my SPX trade's got to be close. I mean, come on, man. I got 5 cents more to go for that 25% profit. Let's go. Let me take a look at JD, and let's go. Here we go. So I've got 500 shares. They're covered at 43 cents or $43. If I close my covered call, this is perfect. This is totally worth rolling. because tomorrow I can only get another 5 cents of profit on this. I might as well take the extra time and roll this trade. And I know my break even's like 41.63. So let me go to my tracker here. Let's go to JD. Come on. There we go. So I own the shares at 41.63. So I have it in this account, and I did the roll there. I have it in. I don't think I have it in this account. I'll double check. I know I have it in this account. Yes, and I have it in this account. Yes. Okay. So I know I have it in 3 accounts. Let me double check here. So JD has 500 shares in 3 accounts. Those are income plays. Got it. All right. So now, little management. This is a good lesson for rolling. Now I'm going to take my $43 covered call, which I collected $1.73 on, and it's now trading for 5 cents. It's 97.7% profit, which means all of that decay has come to me. So it's now an income trade, and I've collected $1.70, about $1.68 of profit. Now I'm hoping I can close it out for 5 cents and I can roll it into another week. So the 18th, I'm going to roll it out to the 25th. I'm going to see what I can get for it. So if I roll this, go back to this trade, sometimes I have to do it twice. So I'm going to roll this out. Okay, so now I'm closing the $43 that expires tomorrow, and I'm going to roll it out. Ooh, that's not great. So if I roll it out to 43, so I know my break even is 41.63. If I roll it down, if I roll it to break even, which gets me a 41.50, let me do the math on this. So if I go 41.63 and I can roll this out for 53 cents, that puts, oh, dang it, 41.63 minus a roll of 53 cents. I can have a break even of 41.10 if I get it called away at 41.50. So I can make $200 credit and lower the cost basis. If I go up a strike, and I would get, let's do this. If I rolled it up to 42, so let's try 41.63 minus 44 cents, puts me at 41.19. Get it called away at 42, make 81 cents a share. I make $405. I'm good with that. So I'm going to roll this out a week and down a strike. And if it gets called away where we pop up here to $42, I get $400 of income. If I go out one more week, I don't think I'm going to get a ton more credit if I go out one more week, but let's find out. Are there earnings? Earnings on November, we're good. So I don't have to go to earnings yet. Oops, so go to the 25th. If I roll this out another week, that gets me into November now. November 1st is pre-election. I go out a couple weeks here. If it gets called away at this one, I'm kind of willing to go down to 41.50. Let me do the math here. Is everyone understanding this? If not, I can spend a little time. I'll talk about, I bought the shares, I covered it, I lowered my cost basis. I'm rolling my call to lower my cost basis. I'm trying to figure out where I'm going to get the stock price called away. So if I roll it to a 41.50, my break even is 41.63. I roll this out for 95 cents credit. That brings me down to that 40.68, and I get it called away for 41.50 times. So I can get $410 and I can roll it down to 41.50. That's only a couple dollars below current price. It's out a couple of weeks. That's not bad. Not bad. If I go up another 50 cents, that should be another $210. So that would be 41.63 minus 81 cents credit. Get it called away at $42. I make $590. So the idea is, number one, repair the stock. Number two, just track the break even as low as I possibly can. I still think JD is a worthy hold, at least in the near term, for the next like 2 to 3 months. So I will probably end up sacrificing some of the upside if it pops back up to those recent highs at $46 or $47. I will be covered at 42 or 41.50. I'm going to get it called away. But it's more important to me that if this becomes an income trade for $400 and it goes up, okay, fine. I'm sacrificing the upside. I'm capping my upside. But in the event that this goes down, it is easy for me to keep moving lower, keep moving lower, keep moving lower, and get the stock called away. That's the most important thing for me. And I could see this area, you've got this wide open gap in here, right? Wide open gap in here. that if we end up pulling back into this like low 30 zone, I got to be able to lower my cost basis with it. So that's probably what I'm going to do. All right, I'll give this a chance. I'll go 42. Let's see. That gives me $400. That gives me $600, right? $590 if it gets called away at $42 by November 1st. Okay. If I wanted to get close to the money, let me do some crazy math here. If I take this down to like a $40, let me see what they lower the cost basis to. So 41.63 minus $1.43. So it's not enough. I don't get a break even. That would essentially be like, I just want to get out of the trade for break even. I could lose 20 cents on it. That's no big deal, but I'm going to try to make a few bucks. So I'm going to go out to the $42, roll my strikes down another $1, get 82 cents on this one. And hopefully this gives me a break even. So 41.63 minus, if I get filled for 83 cents, I'm going to try to sneak a couple more. 40.80, get it called away at 42, $1.20. So that's $600. All right, I'm going to go for this one. So I'm lowering my strike to 42. I'm going out 2 weeks, 83 cents a credit. I'm going to try to get 85. See if this will take. Didn't take it 85. Trying to take it 84. Trying to take it 83. Okay, the bid is 79. Filled at 82 cents. Okay, so that trade, I'm going to go similar order for this account. Actually, just to make sure I do, I'm going to just do it manually. So this account, there's my 43. I'm going to roll this now. Quick roll out to the first, down to 42. Try to grab 83 cents. 82 cents. Survey says, you dirty dog. 82 should be filled. Come on. 81. Filled at 81. Okay, and then this last account for this trade, there's my covered call. Do a quick roll. Expiration the first, roll it down to 42. Try to get 83 cents again. And then work it down until I get filled, hopefully by 82 or 81. And it looks like 81 is going to fill. Filled. Okay, got filled at 82 cents. And this one got filled at 81 cents. All right, so I'm going to update my tracker. Does anybody have shares with me in this? Maybe you bought 100 shares. If you bought, I bought 500 shares. Either way, the numbers are going to work similar. You just track your buy price minus your covered call, and then I rolled it. So then the next credit, and then I rolled it again. So the next credit. So here's what it looks like on my tracker. So I rolled out. So I'm going here. I can go ahead and delete this $1.37 per share. And I rolled to 11/1 expiration, $42 covered call for 81 cents credit. What just happened there? That was weird. 81 cents credit. And I collected 81, 82, and 82, but I'm just going to go to the low end. So 82, 81. So that puts my break even, should be 40 and change here. So 41.63 minus 0.81 puts my new break even at 40.82. So if called away, that's $1.18 per share. So that way I know if it gets called away at 42, I make 118 a share, 118 a share, and I've got 500 shares. I make $590. Okay. So I'm curious how many traders I have that are in the JD trade with me, and if you're able to track it. So can you explain what rolling and what the? Yep. So this is just a great live example to share. So right now, let me update this. So I'm going to get rid of all this crap here. So bought the share. Okay, so this is a good example here. So as I walk through this, let's pay attention here, okay? So I bought the shares at 43.90, okay? Against that, I sell a $44 covered call for 60 cents credit. That's the first part of this journey. Is I bought the shares for $43.90. Okay. And do the math on that. So I buy shares at 43.90 and I buy, let's say you buy 500 shares like I did, or let's just make it easier, buy 100 shares. So you can control an options contract. So I buy 100 shares at 43.90. If I cover those 100 shares with a one contract sell call, that covers all 100 shares that I buy. So I covered them for 60 cents. I bought them at $43.90. I covered them at $44, lowers my cost basis by 60 cents. So that brings me down to a break even of 43.30. So if it gets called away at $44, I make 70 cents per share. So if I'm in 100 shares, I make 70 bucks. If I'm in 500 shares, I make $350. Everybody following that? Okay, so I sold the $44 cover call for 60 cents credit. Then I rolled. Okay, I rolled to 10/18 expiration, $43 covered call for $1.67 credit, which puts my break even. So this would be, let's go break even here. Break even would be 43.30 because I took off 60 cents. And then my 43.30, which is my break even here. Okay, so after the first covered call, my shares are break even at 43.30. 43.30. And the reason I rolled this again is because I could close out this covered call instead of going for the entire expiration and trying to grab the full 60 cents. What I did instead is I closed it out for like 5 cents. And I collected most of that premium. And I'm just rolling it because it's not worth hanging on to it for another 1 or 2 days to get 5 cents when I can just go out and grab $1.67 over the next week. So that's what I did. All right. So my break even at 43.30, and I took that trade for $1.67, which brings me down to 41.63. So now the break even is 41.63. And then I rolled to the 11/1. This is what I just did today. Expiration $42 covered call for 81 cents credit. And that gives me another break even. So my 41.63 is now 81 cents cheaper. So now my break even is 40.82. Okay. So break even 40.82. If it gets called away at $42, which is my covered call, then that's the profit that I can keep. So it gets called away at 42. I keep $1.18 a share. If it's 100 shares, I make $118. If it's 500 shares like I have, it's $590. And I will keep doing this until this is profitable. Okay. Does that make sense? Now, I realize that if this stock, and this is where everyone like, oh, that makes a lot of sense. That's perfect. I should do that too. And then price does this. Boom. It goes right back up to the highs. And it's like, well, I got it covered at $42 and I'm missing out on all this profit. Well, if this stock goes down to $27.50, I have to aggressively lower my cost basis week after week after week, which I'll do that. I'm going to make money on this trade. Okay. So if I lose a little bit to the upside, it's okay. I'm still going to turn hopefully $500 or $600. I'd like to somehow time it well enough where, price does turn up and I can roll it again and maybe grab an extra 30 to 40, 50 cents and maybe turn it into $1,000 profit. So I will finesse this. If I get it called away at 42 right now, it's going to make me, $590. If I get a chance to roll it again, maybe I can time it where I can turn it into $600, $700, $800, But eventually I will turn this trade into profit and it's going to be fine. But I'm in this trade. Okay. So that's a little lesson on, I talked about this a little bit with Nick on Tuesday for that top strategy session, which I think is floating around in either the Discord or it's in the A1 Trading YouTube channel. So I would check that session out. It was an hour and 40 minutes. I thought it was great. I think Chandler trimmed it up so it was nice and neat. But I think it's a great session. I talk about just trading the stock market in general as an investor, trading the markets like Forex and crypto and futures because it's price action based. And then we get into some simple option stuff too. Okay. Yep. So if you want to get that, there you go. So send a direct message to the team and they can hook you up with that post. Right. Okay, cool. So that's a little lesson there on JD. And I'll keep tabs on this one. I am going to watch it, but this is out to November 1st. So there's really nothing to do now. If price goes up, here's one thing I will do. If price pops back above, I may look at another roll on this one. But the issue now is that if I want to roll it, I probably got to roll it out farther in time. And that's not necessarily a bad thing. But in the back of my mind, I'm wondering if Trump wins November 5th or 6th, whenever it is. If Trump wins, I do wonder if China stocks are going to be like, oh, crap, tariffs are coming. I don't know. That's just in the back of my head. I think there's still stimulus and the global economy is going to lift off and we still have, highs to be made for the year if everything just stays afloat. Basically, the market is waiting for this. Okay. What is the market waiting for? Okay. We have elevated VIX, which is your volatility and your fear gauge. It's elevated and it stayed very elevated since August 5th. As we go into the election, we have election jitters, which doesn't mean it's going to be like, oh, it's a big deal, but it's like the market just wants to get it out of the way. Like whoever president is, market's going to digest it and run with it, good, bad, and different. We don't know if it's going to be up or down for either candidate. It doesn't really matter. But once it's done, like once the market can say, okay, election jitters, it's over. It's now a reality. Then we have the Fed. What else? What else is in here? So you got the Fed. Fed November 7th, 25 basis points cut. Okay, once these things are done, then it gives the market the clarity to say like, okay, we can move on and do something else. And I think we're in a pretty good environment right now. I know things seem a little top heavy, but as I mentioned earlier, there's so much protection out there. So many puts are being bought. Like if you look at, have you seen the price skew in the markets? This is pretty wild. I see this every morning in my daily profit play. By the way, this thing hasn't closed yet. This price has been cooperative all morning. I think it's just I'm going after the slightly bigger take profit. It's just sticking around that 85 to 90 cent zone. I mean, come on, would you? So 25%. Let me see if I get, if I pull 85, so 110 minus 85. 110 minus 85 is 25 cents divided by 110. That's a 20. Yeah, I'm just going to go after that. I'm just going to take the 22. So I'm going to go change this to my 80-cent debit. Whatever, just leave it. I mean, I'm just looking at like I'm 5 or 6 cents away. Hopefully it's fine. Anyway, this will probably hit by the next 12 minutes or so. I hope it does. What was I talking about? Oh, I was going to say the put skew. If I go to check this out. If I go to the SPY for tomorrow, okay, take a look at this. What is running right now? These trades are done, right? Oh, that's my butterfly. Okay. If I go to the SPY, I want you to see the difference between if I were to do some premium collection here. So this is the expected move for the SPY by tomorrow. If I sell, let's just look at the deltas here. If I sell a, let's just go like 11 delta. If I sell an 11 delta call for tomorrow, I can get 25 cents. Okay, so I get 25 cents. If I sell an 11 delta put, I get 29 cents. Now that might not seem like a lot, but getting 4 to 5 cents extra, if you do this on the SPX, okay, the SPX, you're getting almost 40 cents difference, like 40 to 50 cents difference. So that price skew is really substantial. And what it's showing us, it has nothing to do with direction, right? This doesn't mean like, oh, the puts are more expensive, so the market's going to go down. It doesn't mean that at all. It just means that it is a higher premium to buy protection right now. And that's why for months and months and months in the summertime, everyone was talking about, I'm saying smart people, we're talking about how cheap it is to buy puts or how cheap it is to buy insurance. Okay. And it paid off with that heavy drop, early August. I mean, really it was August 1st, 2nd, 5th. You needed all the insurance in the world because that was a crazy vol event. After that, you haven't needed anything. April was a little bit of a discount, a little bit of a pullback, but August was a very disruptive vol event. But other than that, it's just and I get it. Like I've been buying insurance and I've been buying puts and I've been trading butterflies and all this other fancy stuff. That's like, if it goes down, I want to be hedged. But I also wonder, the contrarian in me is wondering, it's like, well, if everybody is buying puts and everybody's overpaying for these puts, that might be the perfect ingredient for the market to be like, that money's worthless. You're wasting all that money. And then when they stop buying it and they just start going back into all-time highs, they get complacent again. And that's when the market's like, okay, now we're going to go. So I just wouldn't be surprised if the market doesn't really want to drop aggressively, because everybody's out there with these long puts and everyone's out there with the higher premium puts to protect their portfolio. It's not a bad thing, right? It's a necessary evil, but it wouldn't surprise me if this market just doesn't really do much of anything as far as pullbacks. We have continued to just chop and make these all-time highs. We do have some jitters here, but look, let me ask you a couple of levels here. If this market pulled back right here, how many of you would buy the dip right there? Right there. And I'm not saying like go in the SPY, but it's like if you buy it there, could that bounce? Yep. How about here? How about here? Okay. Certainly here. I don't know if we're going to have an 8 to 10% correction before the election. I doubt it. We could. Could we have a correction because of the election? Because of the combo of the election and the Fed and non-farm payroll? There's so much volatility that first week of November. It's going to be pretty crazy, right? Now, I would say at that time, it's probably worth some type of protection just to make sure. And nobody knows the timing. It could happen before the election. It could happen weeks and weeks after the election. Who knows? But I wouldn't mind having some protection as we go into the election for that reason. But I look at all these levels like this is still fairly healthy. I think the market broadly is still really well supported. A dip is a dip, a pullback's a pullback. I don't see there being any major technical damage or structural damage unless we take out this August 5th low, right? So any of these areas that I noted here, I would be interested in buying dips, or at least putting on some bull calls or bull put spreads on all these levels and just having some exposure and seeing if we get to higher highs for the year. Okay, NASDAQ, same thing. If I go NASDAQ, same thing. NASDAQ, we're not quite to all-time highs, but pretty well supported. We have support, we have support, we have support. 50 and 100, we dip into this area, and then we go higher. Okay, pull back in this area. We don't take out the low. Is it able to get back to these highs? I also wouldn't be surprised if we just keep grinding and grinding and grinding and grinding and grinding, and we get to these highs, and then there's a little bit more of a pullback or stall. And then we see if post-election, we can actually go into higher highs. I'm going to be in a webinar today at 1 o'clock that is talking about the last time we had this rate cut by the Fed while the market had a sell-off was 1998. 1998 to 1999 into 2000, the tech market ripped like crazy. The stock market itself ripped like crazy. It would be an interesting repeat if we did that. If we truly have like another 1 or 2 years of this like late cycle extension or this like cycle reset where the market still has room to run and margins are still looking good, earnings season comes out really positive consensus wise, so we could still have more upside. Don't fight this stuff. I don't think it's worth it. Okay. The Dow gapped up again, all-time highs. Okay, cool. I mean, the Dow actually looks like it's performing better than the others. When really it's not 20+% for the year, but price action wise, like it's got some space. We are creating some space between the 200 EMA right now. We haven't hit it in a while. Yeah, we haven't hit this in a minute. So this is last time we tested it was there. We are now 240 bars. It's not crazy overextended, but it's overextended enough where maybe a pull back to this level, I'd be looking for credit spreads. Pull back to this level, looking for credit spreads. A pullback below the 50 and the 100, then back above it. That'd be a great spot for credit spread or bull call spreads. There's all sorts of ways to get the job done. All sorts of strategies we can trade to make some money there. I just want to see if we get the pullback to offer up the dip. Okay, the Russell, another slightly, actually, yesterday's high was better. The Russell did great yesterday compared to the other markets. It was like up, 1 point some percent versus the others being down, right? The Russell was up yesterday while the market was down, which is kind of nice to see. Can I explain why gold went up today? Because the current price is higher than the open? Just kidding. I don't know. I mean, gold's all-time highs. Frank, gold's running away from you. No, I don't know. I mean, gold just maintains a bid. It's been one of the better assets for the entire year. It's been one of the better bullish markets for the year. It's a healthy bull market. I still don't look at gold and think like, oh my gosh, I'm going to sell this. I don't want to, right? I mean, if this is up and sideways, up and sideways, up again, look, this can stretch higher and higher and higher. If I'm going to start looking to protect 25% take profit hit, finally. That took a little longer than I wanted to, but still, I'm going to update this over here. Trade update. Daily profit play update. SPX trade 1, $1.10 credit and 80 cents debit. Okay, so I'm good with that trade there. Went after larger profit target. Took longer to hit, obviously. Okay, good stuff. Gold has been in a healthy market. It's looked bullish all year, from pushes to pauses, pushes to pauses, pushes and melt ups. I'm looking at, if gold gets a little capitulation move where it starts to get really aggressive, it almost looks exponential, then I'm going to start looking at, okay, I think it's time to start trailing my stop losses and making sure that any type of nasty correction, I'm not going to lose out on this upside potential, and I'm not going to give a lot back if the market tops out. But if gold just keeps doing this, if gold is going up a little bit and then pausing, and then up a little bit more and pausing, and up a little bit more and pausing, that's fine, because it just shows that there's healthy accumulation and there's pushing higher. That's fine. But if it gets exponential, then I'm looking at, okay, it might be a little toppy. But look, we've got some good volume coming in. We're breaking out. It's fine. I mean, I don't know why gold's going up, other than we've got interest rates being cut. The ECB cut rates today by 25 basis points. The Fed's going to cut in November. Yeah, we'll find out. So I did see something a little disturbing today about the 30-year mortgage. Somebody's talking about mortgages being down to about 5.75 by the end of next year. And I'm like, mother effers. The 30-year right now, or the 30-year mortgage is 6.32. It is extremely sticky right now, and I'm not loving this. I'm hoping that with 2 more cuts by the end of the year, this at least goes back down towards like 6%. I'd like to see this settle in. I mean, my gosh, if the Fed is at like 4.25, if the Fed's at 4.25, obviously banks are going to keep their freaking margins, but come on, man, you can't go 4.25 and have this thing at 6.3. It's got to give a little bit. I'm hoping. I'm saying that because I'm buying a house next year, but I'm trying to close in April. I'm trying to get the rates as low as possible. I'll probably have to fork over a little cash to lower the percentage. I mean, if I buy down by 50 basis points, I'll see what that gets me, maybe low 5s, which I'm not in love with, but we'll figure it out. All right. So yeah, Santiago, I mean, it's just, I think gold is just a great market to be staying bid. I want to see if silver is performing the same today as well. Silver is up about the same, 0.74% on silver. So not quite taking out these recent highs, but I'd love to see it take out those highs and make some momentum shifts into the high 35s, almost $36 for my first target. I'm still trying to hold on to silver. I'll probably end up taking profit here and then reestablishing. I've got a lot of profits running on silver. I'm up like close to 40 grand right now. So if I go between my silver position, so I've got SLV and my silver futures. So I've got that's about $9,000 right there. So in silver futures, about $9,000. And then in SLV, around $39,000. So I'm up like 48 grand on silver. If we get a push up, let me just do the math here. We get up another, this measure move at 35. Let's see what that percentage is. If I go up another 12%, so if I go 40, let's go 48K in profit plus another 12%, I'd be up to 53, almost $54,000. Probably going to take some profit there just to protect. I can always get back in. I can always stay in. I can always trap, whatever. I just think I'm going to hold out to that level. And Bitcoin still has some room to run too. We are getting some resistance at Bitcoin. This is the level I've been watching. Heavy resistance right up here at the top. I don't know. In a way, it's like if Bitcoin breaks out, that's fine. I have established some new positions on BITO and IBIT, FBTC. If Bitcoin pulls back, this is still a really good spot to look for buying. We're coming right back into the 200. Look at how these EMAs are clustered together. That could offer some really nice dynamic support. Okay. So if we pull back towards like 60,000, that could be a good buy zone, provided we get like a nice little indecision candle, then go higher. But what we're really, I think for all the bulls out there, we're just patiently waiting to see, do we break into some fresh highs? If we break and we pause, that'd be a nice little accumulation zone. And then we see if we go higher and higher and we break all-time highs, and then we're off and running. And this momentum really kicks up. And this is a swing, all this for accumulation and then another measured move. And that is why I had this big yellow box in the background, because I've measured symmetry all the way to 107, almost 108. And that would be a wave 3. So if this is wave 1, this is a pullback and consolidation zone for wave 2. Wave 3 is measured all the way up here. So 108. And I'd be looking to take some profit there or let it go to wave 5. If it pushes wave 3, pauses here, pushes wave 5, wherever this pulls back, like measure the symmetry. Maybe we're in the 40s, 150s. So Bitcoin could be a fun ride to take. If Ethereum would do the same thing, it's got to get above 28.15 for me. MicroStrategy has pulled back from those recent highs. Pretty choppy on this one. I'm not doing anything with MicroStrategy outside of sitting down here with these ratio spreads and these 111s for profit, just income trades. I would buy shares if we come back into like 160 or lower, but probably not. I'd rather just trade the income because the IV is pretty high. Copper, I'm staying out of copper for right now. If China is not showing any sign of upside, copper is probably going to drop. Copper is big in China, and I think copper buyers for a while have thought, I mean, this almost looks like China, right? China went up, China went down, copper went up, copper went down. So if China turns the corner again, then I'd say copper has a chance to go bullish. Otherwise, I'm going to stay out of it for right now. Okay, Japanese yen, nothing there. Nikkei has been asleep at the wheel for the last couple of, almost since when? Since like mid-September. We haven't seen much in the Nikkei. FXY, this is Japanese yen. That's out to 2026. Oh, let's talk uranium. Everyone's probably reading some headlines about uranium. There's big partnerships going on in energy and nuclear energy. I'm in URA. I own it. This one's up a decent chunk. So my play on URA, I can just show you right here. Let's go to URA. So right now I'm up about just shy of $13,000. I have some shares. I have a lot of puts. I've got a call out to 2026. I've got a $20 call and I've got a $22 call. I'm going out longer term. Okay. Because if this one is going to run, this is another one that I've measured. Let me get rid of my moving averages here. So URA, if we range on this one, I'm totally fine scooping up some more in the $20 zone. Okay. But if this is breakout consolidation, what I'm hoping for is this isn't just a sideways area. If this is sideways, okay, and if this is a fake out, we come back down, okay, fine. This is why I'm out to 2026. What I'm kind of hoping for is that this wedge has broken out, forming a pullback again, getting to higher highs. If we break this momentum high, then this is looking good for some open space. And so I'm targeting like the mid 40s for a wave 3. Right? It's pretty straightforward. If I draw a box here from this low to high right there, and then paste some symmetry, puts me up around $42. Okay. Paste that again. Let's say that we pull back to past resistance becoming support, and that put me up to around 56. So I've got two targets on URA, $42 and $56. And so I'm long a call to kind of leverage my gain, but I'm also long the shares to let them ride and take some profit at my my destination. So I do like this trade. Yeah, I'm long uranium, and there's other ways to trade it. But I'm not interested in like the miners. I'm just interested in the spot price and something that reflects. If uranium is going higher, and there's what I keep reading about it, there's supply issues, and so if everyone's making this migration into nuclear energy and cleaning up nuclear energy, then the supply is very, very limited, and there's a lot of scarcity, and that could certainly drive up prices. So that's a play, but it's been pretty good for a kind of diversified. It's kind of a non-correlated thing, not correlated to the S&P, which is nice, right? But it's higher beta. It's going to be a little bit more volatile, but I'll keep that there for just some measure moves. All right. Anything else for me today? I don't know if we have another guest on. Seems like I haven't been pulled off yet. So let's see here.
Hey, Chris, I
Hey.
got bad news.
Cool. No worries,
All
man.
right.
I did my stuff. All right. Thanks, Chandler.
Yep. Guys, I've been putting Chris's YouTube in the chat. Make sure to go subscribe to him. He's on every single day.
Yep.
He's in the Discord at the Pulver Alerts. So if you want to purchase that as well, we have a way to contact someone on the sales team, and they can get you hooked up with something. So, Chris, thanks for coming on.
Of course. All right. See you guys tomorrow. Thanks.
All right. See you.
Bye.
All right. And guys, we got Nick Phillips next. So hang in, and we're going to run this quick break, and we'll be right back.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. Welcome to the 11 o'clock segment of the A1 Trading Show. My name is Nick Phillips. I am a Forex futures trader, for those of you that don't know me. And yeah, let's get into it. So this week we have had sort of a, I don't want to say it's been quiet. There's been a little bit of movement, but of the data that we have been trading, which has included some pound data, some Australian data, New Zealand dollar data, and CAD data. This is everything we've traded this week. GBP employment change figures, CAD CPI, NZD CPI, pound CPI, the Australian dollar employment change late last night, and the ECB meeting this morning. Of all of those, the beginning of the week, the data that came out at the beginning of the week was rather mixed. We had no trades on the employment change information out of the pound. We had no trades out of the CPI out of Canada. We had, with NZD CPI, the data was as expected, but it also dropped during the rollover hour for the markets. So that was a non-tradable event. The only two events that gave us real solid opportunities this week was the pound CPI, which gave a slight downside surprise, and we took some sells on that. I'll go over that in a second. And then odd employment change gave a really strong indication for the Australian labor market, and we were able to take some quick buys off of that. This morning's data, however, was pretty mixed. When it comes to U.S. jobless claims, we had a big drop in jobless claims, which was a bit of a surprise given the weather situation and the strikes situation that has happened recently with the ports going on strike, which obviously that's been resolved, but that was still sort of expected to impact the labor market slightly. And then with the recent hurricanes, there was some speculation that that was going to increase jobless claims as well. And we've seen, at least today, that is not the case, not yet at least. We had less people claiming that they were out of work than the markets were expecting. And because of that, we saw a big upside push in the dollar this morning. Now, this data came out at the same time as the Philly Fed and retail sales. Retail sales was mostly as expected. You can see here based on this lightning bolt. If we get a lightning bolt in this calendar, what it means is that the actual data has surprised all the forecasters. So this is the high end of the forecasting numbers, and these are the low end of the forecasting numbers. And then right here, you get the median, which is what you see on something like Forex Factory. We didn't have any surprises outside of the bank ranges for retail sales. while it was hotter than the median forecast, it was still inside range, so we consider that as expected. Jobless claims, again, another one that surprised the markets from the median, but did not surprise based on the actual range figures. So maybe a little bit of an overreaction here out of the dollar this morning. Sort of my outlook, anyways, is that it's a bit of an overreaction. I certainly am not going to be selling the dollar at this level based on that idea of a overreaction. I think there's still some room to the upside for the doxy on this news. It's just a matter of how long this move is going to be sustained. Now, there's been a bit of a challenge to my outlook on the dollar as I've reanalyzed the fundamentals a bit. We have inflation heading to target. We have a strong labor market that has had a period of weakness over the last few months, but really the weakness in the labor market and inflation coming down is sort of just a renormalization of the economy. That's the way I'm starting to see it. And so I think over the next few weeks, depending on how things go with the election, I think we're going to start seeing the Goldilocks term pop up. It's sort of left the conversation after this summer. After again a reevaluation of everything that's going on a macro scale, I think the Feds maybe should have started cutting over the summer. Could have alleviated some of that softness hitting the labor market. But now that they've gone 50 basis points, and we have the holiday season coming up, and we have the election coming up, I'm seeing a bit of a tilt in the upside potential for the dollar. I don't quite know if the Feds are going to continue to cut as maybe aggressively as we think, meaning the markets are pricing in 25 basis points for the next one. Let's go look at where the Fed Watch tool is showing us the rates are going. So 25 basis point cut for the next meeting in November. Beyond that, we're looking at an additional 25 basis point cuts. Let's go to about middle of next year. Markets are projecting mid to upper threes on the interest rates. I don't know if I'm super confident in this outlook. And the reason being, too much cuts over the next 6 months, 6 to 9 months, I think could present a potential inflationary issue again. And so I see a lot of kicking the can down the road over the next 6 months. I see a lot of we like where monetary policy is at. We don't want to create any upside inflation risk. And all of this sort of outlook, this longer term outlook, we are theoretically moving into a rate cutting cycle. If you look back at 2021 to basically the end of 2023, we were in a rate hike cycle. I don't know if I'm buying in as much as I thought I was. I don't know if I'm buying into the rate cut cycle anymore. It seems like a great idea. Sure, on the surface, you have inflation coming down, you have a strong labor market. Why not ease monetary policy? But there's also a case for maintaining a relatively restrictive monetary policy if we have an economy that is still growing. And just take a look at the S&P. We are incredibly robust on the S&P. Why would we be cutting rates? The economy is still strong. So You have a 4.75 rate, but the economy's still going strong. So that's sort of my. There's some other levels to this problem too. We have corporate profits are up, and with corporate profits being up, we shouldn't theoretically see any job cuts happening, because corporations aren't going to cut jobs when they're increasing profits. They're going to reinvest profits back into their business, and a big part of that is going to be, I think, continued labor market strength. So you have corporate profits up. A big indication of a recession is job losses. But if corporate profits are up and they're not cutting jobs, we shouldn't see job losses, which means we won't necessarily see a recession, which points us back to, why would we be easing monetary policy if we still have a really strong economy, given where interest rates are at currently? So all of that to say, I think once we get past the election, there's going to be some more clarity. I think once we get past the holiday season and we move into Q1 of next year, there should be some more clarity on where we're going to be headed with monetary policy. I sort of see, I can foresee a hold of rates in this 4 range. If it goes drastically lower than that, I think it's going to take a massive shift in corporate earnings and the job market. I don't know that inflation is going to, I don't know if we're going to dip into a disinflationary sort of realm and that be a catalyst for cutting. I think it's going to come down to the labor market, which is ultimately going to come down to corporate earnings. And so far, with companies like NVIDIA and Meta and Apple and all these companies doing the AI race right now, it's similar to what I know. I was obviously a child when this was happening, but it's similar to what I know about the dot-com boom in the early 2000s. We have robust tech growth. We have, a really solid overall economy. We have a strong labor market. There's no reason to cut rates. There's no reason to start easing monetary policy, because there's no weakness, right? So the typical dovish move out of any central bank is in response to the typical cut rates, make monetary policy easy, is due to an economy that's slow. It's due to an economy that's super cool, and we're just not seeing that so far. So dollar projections for me, they're tough, but I do see a lot more potential for the upside than I was originally thinking over the last couple weeks. With that being said, I'm totally on board with the way that we scalp, which is red folder scalping. I'm on board with taking the dollar either way. If we get bad data, I'm scalping the dollar down. If we get good data, I'm scalping the dollar up. This week, we haven't had much as far as dollar data. We had retail sales today, which we didn't necessarily. I took a trade off of SP500 this morning, but it had nothing to do with retail sales or jobless claims. It was a purely technical trade based on a overstretched ES tapping into these highs, these all-time highs, and giving me a nice little rejection formation. Right in here. You see this big push up, price fell, big push up again, 9:30 volume comes in. I got in a quick sell here and jumped out here. This was purely positioning, purely technicals, no real reason fundamentally to start selling the S&P 500. So we didn't trade retail sales, but we did trade Australian jobs last night, which was a great trade. The only thing I don't like about this trade is that I did not hold it farther. But we saw a hot Australian dollar labor market, or Australian labor market, come into play. And so the way that we scalp, if we get the right data within 5 to 30 seconds, we're getting in. And I got in about just after the first 5-second candle. First 5-second candle pops up. Second 5 candle starts to form. I entered here and I got out real fast. And then I was sitting around, waiting around for about an hour afterwards to see if price would come back into this area to test this little wick range here. Didn't end up happening until early this morning, around midnight. So I was not involved in this trade at all, this buyback up here. What else did we have? We had pound data, pound CPI data. Let's review how that came out real quick. Downside surprise for the pound. So downside surprise on the pound. This was a real easy trade. This dropped Wednesday morning at 2 a.m. I would have loved to have gotten in similar to the way I got in on odd here on this candle, and I would have been out within 5 to 10 seconds, but I missed this entry. So I waited around a little bit. Price tapped into here, saw this little bit of rejection, fell down, tried to push up, rejected again, tried to push up, started rejecting. So my position was in here. Don't quite have this marked up properly. Again, a real quick trade. This was about a 1 to 3, which was nice. And my target was based on structure. So where is this line at? 103, 1.30. I was off of bad data, just targeting this major support here at 1.30 and got out. Real simple. So the way that we prep for this, trade triggers, pound CPI. I have my figures here. I messed up the graphic with this, but basically, if we see the core, regular, and services come out above the expected range, then I'll be looking to buy. And if we saw the vice versa of that, which again, I messed up here, but I go live and walk through all this, but this should have been less than, these should have all been less than symbols. If we see the CPI figures come out less than expected, there's that recalibration effect. So prices got to recalibrate, and we want to jump in as price is recalibrating real quick, in, out. And that's exactly what we got. We got this bearish surprise out of GBP CPI and jumped in on quick sells. So other than odd employment, which again, we got a hot odd employment and a cool pound CPI, other than those two pieces of data this week, really has not been a super busy week for us. Now, next week, I believe we have one of my favorite pieces of economic data. Not my favorite pieces of economic data, but my overall favorite day, I should say. This day, Thursday, October 24th, when we get the Euro PMIs between the French and German, and then we follow up with pound flash PMIs, and then we follow up with USD PMIs. This is one of my favorite days every single month because it is historically given us the most frequent tradable opportunities. So we will be paying very close attention on Thursday to what is coming out of the Eurozone, the pound, and the US dollar. Then we'll trade CAD retail sales. And we're going to watch the BOC press conference and interest rate decision, but that's about it. So we actually don't trade next week until Wednesday. And then Wednesday and Thursday is going to be about a 24-hour, really just early New York session on Wednesday, a London session and New York session on Thursday, and then CAD retail sales on Friday. So another kind of quiet week, a really big day on Thursday, but other than that, not much for next week. And then before you know it, we are quickly approaching, we have NFP, and the week after that, we're in election season. So, or election week. A lot of excitement coming to the market for that. I think once the election is past us and we know who the president is going to be, it should be rather interesting to see how the markets react to that. I think there's going to likely be a quick adjustment. Once the president is elected, whether it's Kamala or it's Trump, it's going to be a relatively, within, I think, 2 weeks, the markets should settle into their adjustments based on who the president is going to be. That is all I have to cover. If you guys have any questions, feel free to drop them in the chat and I will go over basically anything you guys have for me. I'll give you guys a couple minutes. Oh, Kwame said NAS 100. If you're looking at a longer term, if you're looking at a longer term view for NAS and S&P 500, I mean, it's, we're still in the everything rally. And there's nothing that's happening that is insinuating to me that we're going to see any sort of sustained downside move out of S&P 500 or NASDAQ. Now, I would say if things escalate, war tensions geopolitically, obviously we should see some significant downside move on ES and NASDAQ. But as of now, it's kind of just like, what's going to stop it? What's going to stop the NQ from continuing to move up? What's going to stop the S&P 500 from continuing to move up? If nothing, then nothing, right? Geopolitical risk, I think, are the biggest sort of risk factor for continued upside in the NASDAQ. With NVIDIA, with the race for AI, again, this is similar. This is a very similar pattern, I think, to the .com era, the early .com era. We are seeing AI start to integrate itself into every level of the market, from the enterprise level at Microsoft and the other big tech companies to the consumer level, where people are just playing around with AI and even small businesses utilizing AI in their everyday work. That sort of new technology taking hold and sort of becoming a new era of a life on the internet, and the major companies sort of in that race. Everybody's in that race right now. Every single major tech company is racing for AI. And with that sort of focus from major corporations, that level of focus on this specific type of technology, I don't see tech stocks suffering. Again, caveated by potential geopolitical risk, obviously. So it does make targets hard. I would say, as of right now, obvious technical targets are going to be previous highs, and then beyond that, it's kind of like anybody's ball game. As we're moving into these areas here in early 2024. Where do you start targeting? Okay, well, an obvious major target could be 20,000. But, the first major target was 19,000. So you could go up by increments of 21, 22, 23. I see a lot more potential for upside right now in the tech sector than I do downside. But we do have an interesting couple weeks coming up with the elections right around the corner, with the Israel and Hamas tensions still in the air. The markets have seemed to have kind of swallowed those pills a little bit, and you can see Nasdaq really hasn't even been affected too much by the recent Israel and Hamas stuff, because the most recent issue happened here on October 1st. Right as we were coming into October, we saw some geopolitical risk rising. I think ES may have reacted a little bit heavier. No, ES reacted just about the same. So the markets shrugged off a brand new resurgence of Israel and Hamas tensions at the beginning of the month. So that's going to really have to explode. Something massive is going to have to explode in order to factor in geopolitical downside. So yeah, I'm bullish on the market as of now. I don't want to say that there's no downside potential, but as of this point in the game, I'm very bullish on this market. I am interested to see how the U.S. election is going to affect it, though. I think with the Trump tariffs coming into play, if he wins, that's my only kind of hindrance for my underlying bias of ES and Nasdaq upside, just general stock market upside. I think both of these presidents may present short-term complications for continued upside move in the stock market. So that's a risk, the geopolitical risk coming out of the Middle East. That could be a potential problem. I think both of those scenarios, while a struggle for the stock market, potential struggle for the stock market, I should say, should theoretically benefit the oil market. And by benefit, I mean should drive the price of oil up pretty significantly. So I'm seeing a bit of oil upside in my worst case scenario for the stock market, but no necessarily oil downside out of best case stock market upside. I think oil is obviously its own beast. However, with the Middle East tensions, I think the risk to the upside is higher than the risk to the downside. Now you can see oil was drastically different than the S&P and Nasdaq during the sort of the resurgence, the beginning of October resurgence of the Israel and Hamas conflicts. We saw a big push in oil. Now we've recovered, I want to say this is probably about 75% if we pull up a fib level and go measured move. Yeah, 76. So we've retraced to almost to the 76 level, which for me, I don't love to see almost 80% retracement of a move like that, as far as confidence that it will push back up to these levels anytime soon. I'd much prefer like a 50% equilibrium discount and then a push back up. Although, the case could be made that these are decent areas to start buying oil back up at. So let's see what else we can touch on. Gold, of course, is just doing gold things and pushing up to all-time highs and pushing past all-time highs, it would seem. 2,700. Again, with no real reason for gold to start to fall. So, we're still just in the everything rally phase of the market, I think. And the upside risk for the downside risk for gold seeming to not necessarily be existent right now. The only thing I would say is I've seen some headlines coming out in the retail space, not retail trading, but sort of just the retail market of general population, where Costco is selling a bunch of gold right now. That makes me a little hesitant, because I'm like, okay, once the mainstream media gets a hold of some information like, oh, Costco is moving a ton of gold, everybody and their mom is buying gold. I'm like, everybody and their mom is buying gold as gold is at its most expensive. That doesn't bode well for me to want to get involved. I would actually much rather look for opportunities to sell gold. So that would be things that would theoretically push the dollar up. But again, I don't just want to sell gold based on its negative or inverse correlation to the dollar. I need some real solid supply and demand data to hit the market for me to want to do this. So, all right, my next focus moving into next week, like I said, my main focus is going to be Thursday's data with the flash PMIs, and Wednesday BOC. I am interested in trading that, but that is all I have for you guys. 73 said up to where? Are you talking about gold up to where? Because that is the question. That is if we knew that, that would be incredible. How do you target all-time highs? I think that's the biggest question everybody wants to know. I mean, where does this gold market go from here if it's continuing to go up before it comes down? And what would drag it down? What would bring gold down? Yeah, no problem, Jay. Happy to help. It's my approach is very interesting because I'm more of a scalper than I am. I really rarely take day trades or swing trades anymore. I am mostly a red folder scalping. So the way that I trade is oftentimes I'm only looking at some of these bigger pictures to give myself an idea of positioning going into data. For instance, like with something with the Australian dollar, we stretched incredibly to the downside going into this labor market data. So when we got really strong labor market data and the market is incredibly down on these higher time frames, like this 4-hour big push to the downside, we're near some major 4-hour support, and then we get really strong labor market data that increases my confidence in my scalp. I go, okay, Australian dollars stretched to the downside. We got economic data that shows the Australian economy is actually a lot stronger than what's currently being priced in. There's going to be a recalibration. I want to be involved in this at least a little bit. And, that's basically the way that I trade, pretty much the only way that I trade anymore. There are times like this morning where I took a quick ES scalp to the downside, but I don't like to do that because then when I have to journal, I have to go my catalyst, no catalyst, and I hate writing no catalyst because it isn't my tightest edge. It's not my sharpest edge in trading. My sharpest edge that I have discovered and I have worked out for myself is scalping that recalibration. I'm a very fast. I can pull the trigger very quickly once I see the data, and I can pull the trigger very quickly once I see the profit. And I lock in profits. I was a part of the recalibration move, and then I wait for the next opportunity. It makes things a little slow sometimes. There are weeks at a time where I don't get a trade. And there are, but basically all of July and August and the beginning of September, minimal trades. I think I took a total of like 4 or 5 trades in 2 months, which is pretty hard when you're showing up for 25 events. I essentially show up for about 20 to 25 events every single month. And so, for most of the summer, there wasn't much to trade. Moving into later September and October, we've had really good opportunities, which has been awesome. But yeah, let's see. Euro USD. So Euro USD is interesting. I brought this article up actually from Forex Live. So their opinion, which I can get behind based on some of their points, is that the Euro Central Bank is behind the curve. So let's go to some of these. Let me highlight some of the things I thought were most important. Right here, Lagarde repeatedly highlighted downside risk to growth and even said that all the data is pointing in the same direction. So all the data is pointing to weakness out of the Euro economy. Okay, we're getting a weaker Euro economy. They should start cutting and making, taking the approach of a dovish stance in order to heat up their cooling economy, right? It's pretty simple when you think about it from all the data is pointing in one direction. We should start easing policy significantly. And they cut today, but there's nothing forward guidance wise out of the ECB that is telling the markets where they're going to go. All she kept saying is they're data dependent, highlighted data dependent. But all the data is pointing in one direction. So sort of some confliction coming out of the ECB. I'm, as my doxy bias is sort of shifting a little more bullish. That's contributing as well. But my overall Euro bias is more downside out of Euro, unless we see some significant changes out of their economic data moving forward, which I think is really what President Lagarde is trying to prepare the market for, is the potential surprises. But so far, all the data is pointing to a weaker Euro economy, and the markets are pricing in. I kind of think the markets are anticipating that the ECB is going to be moving in a easing direction significantly for the foreseeable future. So Euro USD downside is sort of my base case, but it is, it's also a matter of entries and where do you get in? How do you try to trade out of this? Are we going to see a little bit of relief here in the next couple of weeks as we approach US elections? If we do, and we come back up to this 1.10 level, I think this could be a good area to start looking to sell out of. If we continue to drop from here, I'm probably not going to be involved in this move. But again, it just depends on how next week's data drops. So on by next Thursday, I will be getting back involved with a Euro trade. Until then, I'm not touching this. So next Thursday, we have the flash PMIs out of France and Germany. And once those drop, I will be I'll be scalping those. But yeah, my overall bias for Euro USD is a bearish bias, but it's sort of caveated by economic data and data dependence coming out of the ECB. All right, guys, I'm not seeing any further questions, so I'm going to go ahead and call it. From all of us here at the A1 Trading Show, thank you, and we will see you again tomorrow.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.